Hello, hello, hello. I'm just making sure that the sound works and everything before we get started, and just checking all my screens work and stuff. Oh, what's going on there? I've got two webcam. Whoa! Oh no, that's fine. What I've done is I've done something very silly. Okay, so my webcam has moved over here. That's weird. Let me just check where it was. Okay, so when I'm on this screen, my webcam is going to move. Let's just stick me over there. Hopefully that's now the same. Okay, yeah, that's better. Let me turn this music down. It's royalty-free music. I made sure that I put on some royalty-free music because last time I did one of these, the audio got cut out entirely, so I couldn't post it on YouTube. So I don't want that to happen again because I guess there's probably quite a few people trying to watch this and get some questions answered, hopefully. I don't know how many of you guys are viewing or anything. It's been so long since I've used Twitch. 116 viewers. I'm going to wait like a couple more minutes just before we kind of get started, just in case there's any stragglers. But then we'll kind of go through and start answering questions, start talking about the portfolio, what the plan is, what's been happening this past week, what I think is going to happen this week, how trading has gone so far today, and all the rest of it. I assume the audio level is okay because none of you are complaining, so hopefully it's all good. So as you can see, I don't know if probably there's quite a few of you guys that are new to like these streams and stuff and new to really interacting with me because perhaps you're newer followers. So I'm generally pretty transparent about things. So I'm happy to show my equity that's in the account that I trade on at the bottom of the screen. You know, I don't try and hide that or anything. It's not as much money as maybe some of you thought. Some of you might think that I'm trading with like, 3 million in my own account or something. No, I'm not. I also have a mortgage and bills to pay and all the rest of it. So I don't do anything too crazy. And I have savings elsewhere as well, and I have money in crypto outside of here as well. So yeah, don't read too much into how much money I'm trading with. I essentially, when I became a green star, the elite level on eToro, the minimum required was 20,000, so I put 20,000 in, and then since then this is what it's grown to. Basically, I've not changed this balance in about three or 4 years now. So that's how we're doing. Congratulations, Lazflow, on outperforming me this month. This month has been a pretty tricky month, actually. I must admit, it's been a tricky month. The market has not gone at all the way I thought it would. I've had some difficulties trading Bitcoin this month as well, though the last couple that I did were pretty decent. If I go into my history, you can kind of see them here. So I shorted. Unfortunately, I didn't close this one at the right time, and the Ethereum Classic, I don't know why I tried trading it. It's just a terrible cryptocurrency. It's not even worth trying to trade. But I did short Bitcoin all the way down to it was essentially 5,900, but obviously the spreads on eToro are quite large, so closed for 6k, opened a long at 6k, and then closed that at essentially the price was 6.3k, the current price. So pretty happy with those trades. Yeah, I guess I'll start looking at what questions people have asked me. I'm going to start with the ones on here, and then I'll come back to it later. Actually, I should unlike them and then like them once I've answered them, because that'll make it easier to keep track of what I've answered. And then I'll go through the chat. So hopefully that's okay with you guys. Yeah, so I'll go through the chat in a minute. I'll answer these first. So the first question is from Chun. Hopefully I'm pronouncing that right. Sounds like a Dutch name. Yeah, he's Dutch. How has coronavirus affected your personal routines and or life? Have the last few weeks in quarantine, social distancing affected your trading at all? So I have effectively been self-quarantining for I guess 2.5, maybe 3 weeks now. it must be about 3 weeks now. Through pretty much, my own choice, I figured things that were going to start turning bad and decided that I didn't really want to catch it. So I took precautions way back in February. I bought a few supplies way before everyone else was, so don't blame me for stockpiling. I didn't buy anything stupid. We haven't thrown anything away. We've used everything we've bought pretty much. I might have thrown away a lettuce or something at some point, but nothing more than usual. But yeah, no. So it hasn't really affected my trading too much. It's affected my mental health a little bit more, just because I'm someone that likes to go out for walks and stuff, and I've so far avoided doing that. I probably will give up and go out for a walk at some point this week because that's still allowed in the UK at the moment. But for the moment, yeah, it's not really had a big impact. I was just about to change office space, so part of the time I trade from my house here, and then part of the time I trade from an office in Basingstoke as well, like a shared office space. And I was just about to sign up for a 12-month contract to a new place, and this was in late January. And I decided not to. And when I explained my reasoning to them, I think they all thought I was crazy because I was panicking about this virus that was basically only in like 3 countries at the time. And I was like, I don't think I can commit to 12 months because I probably won't get good value out of it. I'm really sorry, but I'll be back in like 6 months. So that's that's kind of funny. Yeah, that's pretty funny little story there. But apart from that, yeah, it hasn't really affected me at all. I guess the only downside with the coronavirus is that it's such a big event, and the markets have been so volatile that I've been really, really on it. So my sleep has actually been pretty crazy. So I've been sleeping from 11 p.m. or something until like 2 a.m. watching the Asian markets open to check that everything's fine in Asia. Going back to sleep, waking up for the European market to open. Again, trading the European Open, making sure that I'm happy with how everything's turning out there. Going back to sleep again, and then waking up at around 12 to trade through the rest of the day until about 7 or 8 o'clock as usual for the US markets. So yeah, it's been busy because I've been trying to make sure that I'm awake for all of those key moments. Most volatility and most volume in trading happens when the market opens and when the market closes. Something like 80 or 90% of all volume happens within an hour after the market opens and an hour before it closes. So those were the times that I was trying to make sure that I was awake and paying attention across all major markets that I have exposure to. So pretty busy. So yeah, hopefully that answers your question, Chun, if I'm pronouncing it right, which I'm probably not. Do you think we bottomed last Monday? Possibly. I'm going to go to my chart up here for this one. So this is the Nasdaq 100. And we're on daily candles. I can actually open this up so you can see what we've got up here. Hopefully you guys can see this because my resolution on this screen is reasonably large, so you might want to full screen this if you're watching it, if you want to be able to read all of this. But essentially I've got moving averages, 3 moving averages, the 20, the 50 and 200. I've got the RSI down here, and then I've got a few lines drawn. So I've just got this Fibonacci drawn, but I did have support resistance lines drawn on here as well earlier. So as you can see, like this is the drop. We can measure it. So you can I consider the Nasdaq the thing that is my benchmark, because those are the kind of stocks that I tend to trade the most. So this is really what's fair-ish to compare my trading performance to. And as you can see, at the height of this, the market was down by around 30%, 29%. And then currently we are sitting at roughly 18% down. So that's what you kind of got to compare to if you're trying to compare my performance. So that means that I've outperformed it by around 35% or so currently. So yeah, pretty happy with that, really. Pretty happy. Although I guess I should probably be measuring from here, right? Because it's the start of 2020. So up here somewhere. Yeah, here. But anyway, yeah. So I think I've done okay. I don't know if the market has bottomed or not. I think there is a chance that it might have now, purely because of the strength of this rally and how long it's lasted. I would have expected today to have been a pretty bad day, but some of the data we've seen coming out from Italy and Spain especially is suggesting that perhaps they are actually through the worst of it during their quarantine. That doesn't mean to say that the virus isn't going to come back if they stop quarantine. And of course, deaths are still accelerating in Spain a little bit, and I think they're about flat in Italy. But again, Spain is like a week or so behind Italy, so you'd expect that to start tapering off a little bit later. In terms of the market bottoming, so coronavirus isn't the only thing we need to look at. We also need to consider the broader economy and the effect that all of the stimulus packages and all of the people not going to work and businesses closing is having. And so I think the market has not necessarily priced that in fully at the price that we're at right now. I think the price we're at right now is really kind of quite an optimistic scenario, talking about a 15% or so drop. And if you go back, even if you look back here in late 2018 when we had this little bear market, this was a bigger fall, 23, 22% roughly for this drop here. And if you kind of stop and you think, is the current situation worse than it was at the end of 2018? I think the answer is obviously yes, much worse. So I don't expect that this level that we're at is going to hold for much longer. I do still think we're going to come back down and retest these lows. But that doesn't necessarily mean that I think that we're going to make new lows. There is a very real possibility that we just bounce off this same support down here again. And if we go back to 2009, which I'll have to go onto a weekly chart to really kind of show you, just to kind of compare, although obviously they are very different situations. So here's 2009. We're on a weekly chart, so obviously the scale is a little bit different. But you can see here that it did actually form a double bottom here before it had its like kind of V-shaped recovery. And it wasn't really so much a V because of how steep this side is and how not steep this side is. Like, this is an entire year, just this bit right here, just to get back to where they started. Took a year. So, and of course, this is the Nasdaq. So the Nasdaq outperformed pretty much all of the other markets in terms of the recovery from 2008. So, yeah, realistically, we're not very far into this. You can see on the same time scale just how few weeks have passed, really. It took 6 months before the bottom was found from the start of the drop back in 2008. So I would expect that we will come back down and test these levels again, probably when earnings roll around and we start to really see the impact that this has had on different companies. I promise I will answer the questions in chat soon. I was not expecting this many questions. I don't know why I wasn't expecting this many questions, but yeah. I should have prepared and got another drink as well. I've only got this can. I forgot how much it makes my voice go dry. I'm just going to check the portfolio quickly. Okay, that's fine. Yeah, so hopefully that answers your question, Brendan. Bad at pronouncing things. What is my YouTube channel name? My YouTube channel name is jaynemesis. I'm going to reply to him on that one. Just because I suspect if he's trying to watch it on YouTube and he doesn't know what the YouTube is, he probably needs to know that. Man, there's a lot of questions on here. Maybe I should do the chat first, because I can answer these afterwards, like when you guys get bored. I'll do a couple more. Well, we'll get down to like M-Bird. That's as far as we'll go, and then I'll start doing something from the chat. Copy you for about a month now. I have faith in your plan. I have a question about how eToro makes the monthly progress, in brackets, the graph for every one of us. Don't understand why you have a positive month and I have a negative one. I only copy you and have no other transaction. Thank you. So I'm going to have a quick look. Okay, so he's drawn down by 11%. Copied in March. Okay, so this is like super... Sorry, I'm on the wrong screen. Super easy to demonstrate. So this guy asking why his performance is different to mine, right? So if you go... He's down by 11% in March. He's only copying me. If we go back to my my performance... over here, you can see that currently I'm 1.7% up for March. And you can see that today we're basically break even over here. So the reason that this happens, and I'm gonna keep it on this screen, and I'm gonna go to the chart. So don't use the chart for everything, because I have seen this kind of bug out a few times, but this is a good rough guide. So this is the chart of if you had invested $10,000 in me, right? But the percentages will still work the same. So here's March, and you can see that the chart does line up with what I just saw, right? Like we are basically at the same, the start of March is here, the end of March is here, right? So we've gone up a tiny bit from the start to the end. What's happened is that this guy would have copied me at somewhere up here. And so he's copied with open trades, which means that he will have been drawn down here. He will be down by around 11%. Makes perfect sense. If you look at the long-term history of my trading, unfortunately these charts only go back for 2 years, so that's as far back as I can go, as March 2018. But you can see that even in prolonged bad periods like this, where I lost 5% for like 4 months in a row, it's a pretty bad end to last year after a great start. Even then, you know, it really doesn't take very long to recover those kind of gains, and it only took 2 months at the start of this year to regain all of the loss if you copied in the middle of last year. And this is why I tell people to copy me for a long time, because it's just more of a guarantee. Obviously, nothing is guaranteed, but it's more likely that you will actually come out of this with a profit. If you're trying to day trade me or swing trade me or get in when you think it's a good time or a bad time, you know, it can work if you really try and time it, but I don't recommend it, to be honest. So that's why he's drawn down. Let's go back to the comments again. Oh man, I'm getting so many. This is a lot more than I thought. Hopefully you guys aren't too bored by it. Cool. So that's that one answered. We'll answer this question next. If it is a question, is there a question mark? What do you think? Okay. Thinking of investing in Nasdaq and Dow Jones 30. Like everyone went through the same numbers. So 80% GDP comes from services industry. And a lot of people are employed in this sector. What do you think? I think it depends on what you classify as a service industry. And you've also got to consider who the service industry is servicing, right? Like, they're servicing everyone. You know, cleaners count as the service industry. Hospitality counts as the service industry. Like, you know, those cleaners are probably having a pretty good time at the moment, to be fair. But, you know, people who are working in a hotel, you know, their job is definitely at risk, and that hotel is very likely to be struggling. So I wouldn't read too much into that. I don't even know if these numbers are actually true. It sounds a little bit high. But even things like Wix.com, right? So I use Wix for my website. This is my website, jaynemesis.com, and I use Wix for it. And if I was a painter and decorator that was using Wix, you know, painting and decorating as a service, Wix is a service, both of those things would be affected, right? So the painter and decorator would be making money, then he wouldn't pay for Wix, which is a service. Everything is going to be affected by this. There will be some sectors that are affected less, but broadly speaking, I wouldn't read too much into that if I were you. So yeah, you know, by all means, you could go long. Realistically, if you kind of sat on the sidelines during any of this, now isn't a terrible time to go long. You may be drawn down, but if you're thinking long term, 2-3 years out, you're almost certainly going to be higher than we are now. So hopefully that answers your question. Oh, it's coming from Twitch as well. Where am I? Do you trade oil? Oh, I've got into the habit of reading chat. I'm sorry. I'm so inconsistent. I'm a bit all over the place, aren't I? No, I don't really trade oil. I did short it a little bit near the start of this whole bear market, though. Didn't make loads of money like Mr. G. Mr. G made a killing on oil. He shorted before the big news came out from the Saudis and the Russians. So, okay. Next. No, I won't play Valorant. Probably. I don't know. I might do. We'll see. Hi, Jay. Just thank you for everything and wanted to know about your thoughts about how much the problem will least. I think you mean last. How long the problem's going to last. And by the problem, I assume you mean coronavirus. It's hard to tell. So I think realistically, we are looking at 6 months worth of disruption as the kind of optimistic scenario. It really depends how much this virus comes back when countries stop quarantine. If we use China as an example, and I know that a lot of people don't trust the Chinese numbers, and I'm kind of on the fence about how accurate they really are. There was a report out yesterday saying that the number of dead in China in Wuhan was actually around 50,000, not the reported number, which is I think 10 times less than that. So even still, if we use China as an example, and you kind of trust the current numbers, then yeah, they managed to control it, right? But if you look at the action that they had to take to control it, and also the actions they're still taking now at all of the borders and at all of the factories and stuff across China, it really is insane. A lot of people think that I don't have very good sources on this, so I have a kind of a weird source for some of this information, right? But I ordered an air filter on Kickstarter. It's a really good air filter. You should all go and buy it. It's quite expensive, so maybe don't go and buy it. Depends how much you like fresh air, I guess. But I ordered this new air filter, right? And it's being produced in China. And this was all, the production was meant to start in February, so right when this thing was really kicking off in China. And obviously the factories were closed and everything else, but they've been posting regular updates about their factories. They have 2 factories. They have one in Shenzhen, and they have one that is somewhere a bit more rural. I can't remember. They're in 2 totally separate areas of the country. Both of those factories are now working. One of them is at about 80%, and the other one is at 100%. So those 2 factories are working right now. In terms of like the effect that it's had and the kind of practices that they're having to carry out. So, for example, the one that's at 80%, the reason it's at 80% is obviously a lot of their staff went away for Chinese New Year, and they have not yet been able to come back. So they're not being allowed back. The ones that have come back, and this is ramping up at the moment, the ones that have come back had to sit through a 2-week quarantine, mandatory quarantine, after traveling back. So they traveled back, they got put into apartments basically and told to live there for 2 weeks before they were allowed out. So those are the kind of measures that China is taking. Obviously, I trust what those guys are saying. They've posted photographic evidence of their factories working, all this kind of stuff, and to reassure the people that bought their products. But those are the kind of actions that the businesses are taking. In fact, on top of that, they're cleaning everything twice a day. All of their staff are wearing masks and gloves and like full PPE, goggles, the whole lot, every single day. So as businesses, they're taking extreme precautions. If you look at airports and train stations in China, there's a similar thing, right? So everyone is being scanned for temperature in the business as well, being checked for temperature twice a day. So all of these precautions are taking place, right? And still, despite all of that, China is still getting new cases. Okay, so they've still got Wuhan pretty much locked down. Not as locked down as it was. They're starting to lift that a bit. They've still got restrictions on travel, on which kind of businesses can operate, and they're still getting new cases. So, it doesn't bode too well that we're actually at the peak. I think we're at the peak of the number of infections that were caused before lockdown in Italy and in Spain. I think when lockdown ends, if it ends soon, we will see cases increase again, and we will have a second or third or fourth lockdown period before we actually finally reach the end of this thing. So, because of that, optimistic scenario, 1 lockdown, 6 months disruption. Pessimistic scenario, 18 months disruption. And, that would essentially mean ending when the vaccine comes out. But we just don't know yet. There's not enough data, really. Jay should get emotes. I should make some emotes. I've actually just paid someone to make a new logo for my website and stuff using Fiverr, of all places. Maybe I should buy some shares in them. But yeah, I'll see how it turns out. My first experience of using Fiverr. I figured I should probably update the website, and I'm going to get some overlays and things made a bit more professionally for this stream as well, since I do plan on streaming again more. Okay, so that was a really, really long-winded answer to the question, but hopefully that does answer your question. There we go. Give that a like. Man, how many of these am I going to do before I come back to these? I've got a lot of chat to read. I'm sure many of you are just duplicating it and posting it in both, aren't you? Okay. Hey Jay, watching you live now. Would like to know your views towards the SPX 500. Yeah, SPX 500. I kind of explained it already. You know, it's the same as the Nasdaq. It's the same as all of these things. Nasdaq will recover more quickly because there's more tech companies that are still operating. Things like Microsoft and Google. You know, yes, they're going to have problems with advertising, but they're still able to provide a service, and they're still able to charge for the services that they provide. Outside of advertising, especially things like cloud services and stuff like that. So Nasdaq will outperform the SPX 500 for sure, and likewise the Dow Jones, because the Dow Jones is just 30 old companies. I think probably the more interesting thing to trade is probably the Russell. So I actually opened an ETF on the Russell because we don't have the Russell on index on eToro like natively, if that makes sense. So we don't just have like a dedicated market for it, but we do have some ETFs. So I did open a small short on there. You can't use leverage on them, but I'm okay with that because I'm trying to keep the risk pretty low at the moment. So I've got one short open on the Russell 2000, because the Russell 2000 includes all of the small and mid caps. So you're getting a much broader kind of picture of America as a whole. Whereas the SPX 500 isn't too bad, but the Nasdaq 100 is basically just Silicon Valley, and the same with the Dow Jones 30. It's actually a pretty bad representation of the American economy as a whole. So the Russell is what I'm looking to kind of trade in terms of what I think is going to have the biggest swing back up potentially. But also it's what's had the most damage, and I do think there's a little bit more damage to come, as I said earlier when we were looking at this chart. Up here of the Nasdaq, I do expect it to come back down and bounce back down to this sort of area here before we start our road to recovery. Cool. Oh man, you guys are just spamming all the questions in here. Oh, I should have just started with chat, shouldn't I? I've done this entirely backwards. Well, I said I'd get down to Mbird, so we're going to do Mbird and then I'll switch to chat, guys. Do you think that this uptake in American markets is due to the stimulus package will keep going, or do you think that we will see another downturn testing the lows we saw in previous days? I think I've just answered that question for you, Mbird. I think we will retest the lows. I didn't think that the bounce would come quite this high. Sorry, I didn't actually show the question. Ooh, there we go. Yeah, so here's the question from Mbird. But as you can see, yeah, I expected the bounce to kind of come up to this sort of area, more in line with like the middle of this area, but we did go a bit higher. So you can see on this wick up here from the weekly candle, I did get a lot of my shorts hit stop loss. Had stop losses up here at around 7,900, and many of them hit. Pretty unfortunate. I reopened some of the positions because I was still confident, and I closed some the next day for some small profits to kind of make up a little bit for the losses. But realistically, wasn't perfect. I do think we're going to come back down. Whether or not we go lower, I'm not sure. We could kind of stop here. That's very possible as well. That would be the safer target, somewhere around 7,400, 7,500. On the Nasdaq would be a safer place to stop. But, we have to play it by ear, right? Like, realistically, the most important data right now that we have is the data that is coming out from coronavirus infections and infection rates and death rates in different countries. So you can see here, actually, this is the first time I've looked today, by the way. 812 deaths again in Italy. So that's not good, because it looked like it was on a bit of a downtrend. What's encouraging, though, is look at this. The new cases is getting lower. It is getting lower slowly. Like, the number of new cases per day is declining. And the same with Spain. Spain has leveled out. It's done 5,000 new cases a day for the past 5 or 6 days now. So I'm hopeful that these numbers do start to come down a little bit. Hopeful. But as I said, we could well, even after this lockdown ends and everything, we could see a second wave of this and a second wave of lockdown. And I actually think that that is the most sensible approach to this thing as well, realistically, is, you know, lockdown as soon as it's clear that hospitals are kind of back under control and everything's okay again, reopen up the economy, let people go to work, let people do things again, but monitor the situation and see how bad it really is. Cool. So let's go through the chat. Okay, you can bear with me, guys, because I need to catch up. Oh man, some of you guys have actually subscribed with Twitch Prime. That's awesome. Thanks so much. You really didn't need to do that. But I guess if you've got free subscriptions from having Prime anyway, right? Like, you might as well use them. That's really nice of you. I'll answer your questions first as a result, if you asked any. Yeah. So Ivan Zone asked a question. What do you think about Sony stocks? With PS5 coming out in the holidays, coronavirus permitting. It's funny you say that, Ivan, because if we head over to my portfolio, just over here, you will see this position opened today. I'm still researching the competition between Sony and Xbox. Obviously, the most important thing that is still to come before we can really make a clear judgment on who's going to win this console war is price. And we don't know who's going to make the first move, but there's pros and cons for both, and actually some of the big people that I use as sources in both of in this industry overall, especially on like the hardware side of things and specifications, those sources actually disagree about who's going to win this console war. So my favorite guy believes that Microsoft is going to win, and my second favorite source believes that Sony is going to win. And both of them, to their credit, have kind of agreed that the competition is pretty tight this time, and they both have different pros and cons. I think Sony might edge it though. It's difficult to know because obviously the exclusives and things play a big part, and to some extent you're kind of locked into ecosystems these days anyway. So how many people are really gonna shift sides? We never really know. Release date is another thing that can affect it. If there's a reasonable difference, and of course, as you said, coronavirus. I have a lot of exposure to Microsoft already. That's not because of their console, it's because I love everything else that the company is doing. The console is a bonus, and I do think it's good, and I do think it'll make them profit. But Microsoft have got so many other great things going on that they are actually the biggest position in my portfolio at the moment, as you can see. And I plan on keeping it that way. I'm a big fan of Microsoft and everything that they're working on at the moment. But I do think that Sony has got a pretty good chance. In terms of the graphical specs, it's not too far behind the Xbox, so I don't think that'll make a big difference. What's interesting is what they've done in terms of memory and RAM, essentially. So I say memory and RAM, I mean like hard drive space and RAM, actually, in reality. They've done some really, really cool stuff with it. It's a bit too complex to explain in this stream, so I'm not going to try and do that. But I would recommend 2 YouTube channels, Cortex and Adored TV. So those are literally my 2 sources. And Adored TV might even be watching this because he signed up to eToro recently. I convinced him because I was like, please come on eToro and copy me because you're one of my main sources for AMD. and you've helped me make some good money, so come copy me. So I hope he's watching this, but he's probably not. But yeah, both of those guys are like insanely knowledgeable about this stuff. Their videos are really in depth on YouTube, and well worth a watch. So if you want to kind of understand a bit more on the hardware side of things, the hardware side of the battle, that's worth looking at. I think Sony's actually good at a lot of other things as well, though. Like, I really think that their camera lineup is strong. I think their TVs are strong at the moment, using Android TV and things like that. They make a lot of good products. I think they're a little bit too stretched, and I would still like Sony to kind of consolidate a little bit more. they remind me a lot of Microsoft about 5 years ago when Microsoft was trying to do everything. And then obviously they changed CEO, kicked out the guy that says developers, developers, developers all the time. And since then, they've kind of streamlined, and Microsoft has become incredibly successful since then. I think Sony needs to do a similar sort of thing. I think, they've got great opportunities for streaming services with their content. They've got, really good audio equipment. They've got really good cameras. They've got really good TVs. They just need to kind of streamline it and focus on, some more core product lines and kind of cut out some of the rubbish stuff. So that's what could hold Sony back, and that's what I'm a little bit reserved about regarding Sony. Hopefully that answers your question. The other guy who subscribed with Twitch Prime was Yayaj. I'm sure I've not pronounced that correctly at all, but I can't see any questions from him. So I'm going to scroll back down to the bottom, see if he's asked one again since then. Didn't know you opened a Sony position. More exclusive console. Pretty much the same. Yeah, I agree. The specs of the console are pretty similar. It's really going to come down to titles and pricing, I think, in terms of who's going to win. But I also believe that both companies will be pretty successful. And if you really want to make money out of the console war, buy some AMD shares, because AMD power both. So yeah, if you think they're going to be successful consoles, just buy AMD. That's the way to make money out of it, I think. Cool. So that's that. This other guy has subscribed as well. So thank you very much, Kandor for subscribing. I can't see a question from you, so I'm gonna scroll all the way back up to the top. Yeah, AMD makes the graphics and the CPU for the Sony, and I think it's just the graphics. No, just the CPU even. No, it must be both. I don't know. My memory is failing me right now. I'm sorry. I've not really been focusing on the console wars much recently, so yeah, I'm not actually super up to date on it. It's on my to-do list. It's on my to-do list along with everything else. Okay, I'm back at the top of the chat. I'm going to start going through some of the questions on here. Hi. Just looking for a question. Where do you see this rebound ending? Pretty much where we are now, to be honest. I just don't. I mean, it could drag out another week. I'm going to bring up the chart up here. This could drag out another week. We could see it come up to this level. It is possible. Like if we measure from down here to up here, that's a 22% rally. That's not out of the question at all. That would be about 50% of the drop in total. A lot of people have suggested that it could do that. We've got this moving average up here as well, so it could bounce off the moving average and this line here, which is also, as you can see, pretty much a support line. I would have drawn it a little bit lower down this level, which is actually perfectly in line with this. So there you go. 8,200 would be the highest I expect the Nasdaq to go. Again, you can apply this to the other indices, and you'll see the same sort of thing. So if I go onto the SPX, I'm pretty sure that we will be able to draw this exact same thing. Where's my? I can never remember where it is anymore. I don't use Fibonacci's that much recently, and then I used one on there, and now I want to do it. Is that? Yeah. Oh no, that's a trend base. I don't want trend base. Oh, go away. I want yes, Fibonacci retracement is what I want. So we measure from down here. So this is basically the same point up to here, right at the top. It has drawn it pretty differently on here, but you can see again, like it stopped at this support level here. It could come up to this one. The moving averages I have on here are not the same. I don't have the 20 moving average drawn for some reason. So I'm just going to quickly add that. Add a moving average. Where is it? 9? Oh, we don't want 9. We want 20. Inputs. So we want 20. Oh, not 920. That's very high. Okay, so all the colors are mismatched from the other one, from the other chart. Sorry about that. Normally I have the lines a bit thicker, so they're easy to see as well. But you can, wait, have I done this right? Oh yeah, so this is the 20. The 20 is down here. So, you know, it's a bit steeper than the Nasdaq. As I said, the Nasdaq will outperform everything, but the same kind of logic applies, right? This looks like a pretty sensible place for it to stop. Realistically, I don't think it's going to go that high. It's going to go maybe to here, and this will come down to meet it, is what I would guess, if it breaks above this moving average here, which actually, as you can see, is kind of coming down, so that's going to cause a bit of pressure on it. It'll be interesting to see. Pretty strong support / resistance at this level. Look at how long the price was at this level back here. You know, that's a long time. So, yeah. I think that I've answered this question essentially quite a few times. This one was phrased different because it was where's the rebound going to end, not where is the price going to go. So, you know, a lot of people ask me if the price is going to go down. I think it will. You are asking where's it going to stop going up. So that's why I kind of gave you the time of day on that question, because it is a different question. So thanks for asking it. What do you think about $OMI? I don't know what it is. It looks like something that I would never trade. I know nothing about this company. Does it tell me? Healthcare logistics. Yeah, healthcare is just not something that I really know very much about or invest in generally. I do have one position in Gilded Sciences. Gilead. I always say Gilded, but it's Gilead or Gilead, whatever you want to call it. I actually picked this up mainly because they had good dividends. So this was before there were rumors about them working on vaccines and all the rest of it. I'm still happy to hold it because of that. They have the added bonus of, you know, performing pretty well during this period. If you actually look, yes, they've had these big spikes up. But generally speaking, if you zoom out, you know, they're in a really nice position. I think in respect of, you know, where the price could potentially go. If you look at the research tab on eToro, which isn't great, but it's an okay quick indicator, you can see what some of the analysts have put down and what hedge funds are doing and stuff. And generally speaking, this is a pretty popular stock. Another source I like to use for looking at stocks is Seeking Alpha. I have Seeking Alpha Premium, and I believe it was one of the highest rated stocks on here. So yeah, up here you don't get the stuff if you're not on Seeking Alpha Premium. So don't expect me to like share this with you just willy-nilly because they'll probably like ban my account or something. But as you can see, like basically the consensus is bullish on this stock generally speaking. You get all of these cool articles and stuff about it if you have Seeking Alpha Premium. I'm a pretty big fan of Seeking Alpha actually. I've used them for a very, very long time, but I finally signed up for Premium a few months ago actually, when I was preparing for this crisis to find stocks like this one that have got great dividend yields. So you can see the dividends here. Yeah, look at that yield. It's a healthy yield. Yeah. So yeah, pretty bullish on them. But apart from that, I don't really look at any healthcare companies. That's all I've got in terms of that kind of position. How worried are you about the proposed central bank digital currencies and their effects on cryptocurrency? That's a good question. Not at all. I'm not at all worried. If we look at what happened with Libra, Facebook Libra, you may remember that I wrote a big post about it on eToro when eToro added a Libra copy fund. I wonder if it's still around, or if they maybe got rid of it. Yeah, here we go, Libra Portfolio. Yeah, so this is the portfolio of companies associated with Libra. So I'll have like Spotify and everyone else in it. You can see them all. Yeah, Shopify was one of the newer ones to join it. I said at the time, you know, first of all, I don't think it's going to work because the government's going to shut it down, which is exactly what happened. But I also think that it is massive validation for cryptocurrencies. They still can't delete Bitcoin. All they can do is compete with Bitcoin. And so central bank cryptocurrencies, yes, they might be able to win that competition, but they have to kind of fight that war first, if that makes sense. They have to fight that economic war with the other currencies, the traditional cryptocurrencies. And you can pretty much bet that people will just kind of look at it and see it as validation of real cryptocurrencies, and they will pick a side. And at a time when central banks are really, churning out money and printing it out a lot, you could see that working pretty well. Oh. Leanne has told me to change my screen. I'm sorry. I wasn't reading the chat. I'm so sorry. I'm so bad at this. Okay. I didn't show you any of the stuff with the yield seeking alpha. Oh my god, this is horrific. Okay, here's seeking alpha. Look, I want seeking alpha again. I'm going to rewind. Leanne came and warned me. She's done her job. This is what I pay her for. Yeah, so here you can see Gilded Sciences. Gilded Sciences, always say it wrong. Seeking Alpha is basically it's great even if you don't have premium. By the way, this website you should all if you're looking at investing in stocks and stuff, it's a great source for some good opinion pieces. So you have analysis down this side and you have news down here. The news is mainly just like bot produced news, so it doesn't really tell you anything that much. But down here you get some really good like in-depth opinion pieces. And you get all sorts of really cool things on Seeking Alpha with premium, which includes all of these ratings and stuff from different groups. So you get quant ratings and all the rest of it, analyst ratings and author ratings. So if I go back onto the summary page, you can see over here, neutral, bullish. So generally speaking, pretty bullish. That's the quant rating. As well. And if we go to the dividends over here, you can they've got like a scorecard. It's like a summary page basically, and you can just straight up see the dividend yield, 3.73%. Not like fantastic, not amazing, not like the kind of thing that you will see at some of the big banks, especially European banks at the moment, but still very, very good. You get the payout ratio and all the rest of it, and when it's due and when it's recorded, all useful information. So yeah, that's why I went with Gilded Sciences. Leanne coming into clutch. Everyone's thanking Leanne. Yeah, sorry guys. I was still like scrolled up because I'm scrolling up to read the questions, and it's bad, I know. Back to the question about cryptocurrencies. Here is the Libra portfolio. You can see the companies that are inside it here. The portfolio. As I said, I was pretty outspoken and said that I didn't think it was going to succeed, and that they would run into a lot of political hurdles, and it would be over the government's dead body that they would allow companies to set up a currency that wasn't controlled by the government. Bitcoin managed to succeed in that because there was no way of shutting it down, whereas it's pretty easy to shut down these companies if they want to, and their cryptocurrency projects. So in summary, I think it'll be good news for Bitcoin and good news for crypto in the short to medium term. They may end up winning out in the long term. It really depends how they structure their currencies. I personally believe that a currency with universal basic income built in, that's inflationary and supported by numerous governments or even just one big country, could definitely work and could just be the future of money essentially. And actually, I kind of want that to happen. I like Bitcoin because it invented this technology and it's decentralized and stuff, but I dislike it because it's all about greed. And I don't think it's going to actually perform that well as a real world currency. It kind of promotes hoarding. There's no way to tax people with it and all these kind of things in terms of like physically take the money from people. And I'm a big fan of taxation, even though I am the top rate of tax in the UK and have huge tax bills. I am still a very big fan of taxation. I'm not a libertarian. I'm quite socialist. So, I would actually welcome those currencies, to be honest. I think I'm generally speaking actually a bit of a fan of I've forgotten the word. not Austrian economics, the other one, whatever it's called. The word has just totally, it's gone. It's out there somewhere, disappeared. Yeah, that's my opinion on that. Thanks for doing this. What is your background? Did you study trading and finance in uni, or are you self-taught? GX339. I am entirely self-taught. I didn't actually finish school. I had 0 qualifications. I ended up going to college and studying IT. Because I had no qualifications from school, though, they put me in the bottom class. They then promoted me to the middle class. I only attended about 50% of the lectures, and got my merit, which is like, it's not the top mark, but it's like the next one down in my BTEC, and that was the last qualification I ever got. They refused to let me go back to the college to attend the next one because my attendance during that year was so bad. So I had crippling social anxiety as a child. Wouldn't leave the house for weeks, months at a time. Properly, insular person. Spent all my time indoors playing games, and kind of learning about the things I liked. And the things I liked at the time were economics and politics, primarily. So I just taught myself. I taught myself some basic programming back then as well, very basic by today's standards, things like CSS and HTML. Don't think that's really considered programming these days, but those are the sorts of things that I kind of spent my time on, and playing a lot of games. That landed me in esports. I learned a lot more, about all of these things in esports. A lot of good traders actually have esports backgrounds. So I think that helped, because you have to learn good, fast decision making when you're playing esports titles, especially strategy games, which is what I used to play. Then I kind of I started trading when I was 18, pretty much as soon as I had enough money to open a trading account. Started with a couple of £1,000, and built it up from there. In 2013, I discovered cryptocurrency as well. And started investing in that. That's pretty much the gist of the story, really. I'm really focused on disruptive technology. So I'm a big geek. I'm a big nerd. I love reading about how AMD has totally changed processors by using a chiplet design, or their more recent stuff with their graphics cards and how it interacts with memory and all of this kind of stuff. And likewise, the same with currencies and things. I love reading about different economic models and all of those sorts of things. So that's what I spent all my time on. By the time I was 14 or 15, I was watching CNBC and Bloomberg on TV for fun. That was actually roughly when 2008, 2009 started, I think. So that was a little bit before that is when I first started really looking at stocks and things. Totally self-taught, never read any books on it, just watched TV, Googled, and experimented really, and tried my hand at trading, and I focused on fundamentals. I still believe fundamentals are the best way of investing, and that's it really. That's my story. So hopefully again answered your question. Hi from Spain. Hello person from Spain with lots of numbers in your username. Is there any percent of this vivid scenario? Any precedent for this vivid scenario? Or is this a first? There is no precedent. There is absolutely zero precedent for this. This is not the same as 2008, 2009, although it will share many similarities, and 2008, 2009 has certainly helped governments and central banks prepare for this. Likewise, there is some precedent for how to handle virus outbreaks. We did have MERS and SARS, and even more recently in America with anti-vaxxing, we've seen measles and things like that coming back and having to be contained. Not to mention, of course, Ebola, which is a really particularly scary one if that got out of control. There are a lot of processes and mechanisms kind of built, and there's a lot of things that we can use to kind of learn from on how to react to it. But that doesn't mean that anything like this has ever happened before. Certainly not in this kind of a scenario. If you look at the Spanish flu, which is probably the most comparable in terms of scale, in 1918, the world was a very different place then. We didn't have markets like we have today. We didn't have, planes going all over the world, global trade, global supply chains. These things just didn't exist. So, you can't really draw much from that. Likewise, the financial crisis didn't have a big virus that was scaring people from even going out and spending money. It didn't have everyone staying at home. It's really a very different situation that we're in. And so you have to kind of keep that in mind when you're trading it, I think. Let's check the most recent chats, because you're all probably shouting at me. You're all just chatting. Keynesian economics, that's the one. Keynesian, thank you. Oh, how did I forget that word? I don't know. Well, named after the man and mystery, of course, that came up with it. I think he won a Nobel Prize for it, actually. What do you get out of us copying you? How do you get paid? Does it take a cut out of our profits per trade? No, it does not. So I will actually explain it for you if I can find it. It's going to be under help and popular investors. Maybe. Yeah, popular investor program here. So there's different tiers of popular investor. These are the different tiers. So blue, yellow, red, and green. Cadet, Rising Star, Champion, and Elite. And you can see how much each star level gets paid. So Cadets get nothing. Rising Star get $500 a month. I think that's a month. Yes, a month. They've changed it. I think it used to be written a different way. Champion is $1,000 a month. And Elite is $1,000 a month plus 2% of annual AUM. So this is calculated monthly. I've always been very transparent about what I'm earning, so I have no problems at all in showing you. So over here, I go to my dashboard. This tells me this is what you get if you're a popular investor. You get this little bit over here. This button, it shows you your AUM and your copiers and little charts. And here you can see currently I'm managing $13.16 million of your money, effectively. Not really directly managing, but obviously that's how much is copying my trades at the moment, mirroring all of my trading. Over here you can see, when people are joining and leaving, how many page views I get. This is where it used to show up payments, but eToro actually shifted payments to a different account a long time ago, so that bit's kind of useless these days. Average copy amount, copy of profitability, so this number is very low because a lot of you guys are drawn down. So 55% of you currently, roughly, are not in profit who are copying me. Some of that will be because you just started and you've got spreads like these guys. Some of it will be because you copied in the middle of March. Obviously, with such a surge of users, a lot of you are slightly or quite largely drawn down at the moment. So, 10% I would consider a reasonably large drawdown. Generally, try and avoid that sort of drawdown, but in current market conditions, that is tricky, to say the least. But yeah, so 2% of this number, that's how much I get paid per year, plus $1,000 a month. So that means roughly, I don't know, I'm bad at this. Let's open a calculator. Here we go. Got my calculator out. It's very hard to predict this for tax, by the way. Absolute nightmare. The way self-employment tax in the UK works, I have to pay it before I've earned it, technically, as I've earned it. So it's really difficult, and it's based on projections from the previous year, because obviously I haven't filed my taxes yet, but I have to pay it the same year that I earn it. So really, really difficult to work out what my tax is going to be, because it varies so much month to month. But if I take 13 million and times it by 0.02 for 2%, that is how much I get paid in US dollars per year currently from eToro. None of that money comes from you as a copier. That money all comes from eToro. eToro has a big marketing budget, essentially, a big budget for everything. And effectively, the way that they make this work, the way that it makes logical sense for them to do this, is that they're still collecting fees from you guys, right? Like, you guys are happy because you're copying my trades, and if we go to my stats page, wherever it is, I'm lost. Go to my stats page, you can see like consistently making profit year after year if we just forget about 2018 because it was a horrible year. But generally speaking, if you're copying good traders, you're going to be making profit. And if you're making profit, you're going to be putting more money on the platform, and you're going to be paying all of those spread fees. The same that I pay spread fees and overnight fees. We've got these short positions open. I go on here, you can see that we paid a fee of $1.22 for me. And for you, if you had the exact same amount of money in this position as me, you would also have $1.22 of fees. It doesn't matter because you're still getting the same profits that I'm generating you. So the fees is what pays eToro, and then from all of the fees that they collect across the whole platform, they then use some of that money to pay us. So hopefully that explains the situation. Yes, it is a lot of money. I'm quite happy to have had the recent pay rise. I, for one, am managing okay, as you can probably imagine, during this current crisis. But yeah, I try and be transparent. I've got nothing to hide. I'm not ashamed of how much money I earn. I do try and give some of it to charity, actually. Gave a bit too much to charity one year and actually struggled to pay my tax. Because I was competing with someone from work who was a millionaire who I was trying to goad him into giving more to a charity. So I doubled his donation and then asked him to pay more, and then he did. So Craig Fletcher, if you're watching, Game Blast, do you remember it? Game Blast 2018, 2017? Can't remember. One of the two. Yeah, that was that was a tough year of trying to pay my taxes. Oh dear. Hello Jay, could you show us one of your graphs and what scenario would have represented a good long short opportunity in your opinion? It's difficult to do that because generally speaking, I don't trade off technical analysis too much. Let's see what we can kind of do it with. I mean, in some ways, I think here is actually this is a pretty good example. Let's see if I can find something else. Wix. What did I open recently? I mean, Amazon isn't a bad one, actually. Let's put that on a daily chart. So, or actually even, no, we're going with Amazon. Okay. So here we have Amazon's chart, daily chart. You can see how unbelievably well they have handled this this situation. I opened quite a lot of extra positions in Amazon over time when it fell below this moving average down here. And the reason for it is that I suspected that down here would be a floor for it. So you can see like pretty clear like support levels along here. I mean, effectively, you've actually got a channel going along here, really. So you've got a channel that kind of comes like along here. Right? Like, look at that. It's beautiful. Beautiful little channel. And so when it fell below this moving average, it's over halfway down this channel. I didn't actually draw this channel at the time, but now that I've drawn it, I'm like, oh, that's smart. That happens sometimes when you're playing around on charts. As you just draw things and you're like, oh, that lines up. Interesting. But yeah, so I assessed the price. I looked at the fundamentals and thought, Amazon is a company that's going to see masses more income from AWS. Their online delivery is going to be extremely competitive during this environment where people don't want to leave their houses. They are one of the very few online delivery companies that has actually invested in their own logistics network. They have their own drivers, they have their own vans, they have their own trucks, their own planes. They've properly actually built out a logistics network capable of handling this increased demand. Although, they did struggle a bit, of course. But importantly, their company was able to continue trading like normal for the most part in many areas of their business. Not to mention, you've got Amazon Prime and you've got Twitch that we're on now. Twitch is obviously going to see a boom in people watching and streaming to it because everyone's at home. So the fundamental case was really, really good. So after deciding the fundamental case was good, came onto the charts, had a look around, drew some lines. I make it sound so simple, don't I? Also, or maybe like a bit too casual. But you know, essentially that's what it is, right? You draw some lines like this, and you kind of look at where the price is, and you see, okay, it's come down here. It's broken below this, which means it's fallen into this range, and we're in this range for a long time. I think it's going to outperform the markets. You look at what the SPX is doing, you look at what the Nasdaq is doing. And then you decide if you want to open positions. So during this period here, I opened some trades. I think I actually opened one below this line as well. I didn't want to get too cocky because when it came down here, I thought, okay, this could invalidate it potentially. Maybe this is going to drop like everything else. So I stopped buying positions because you don't want to go too crazy with it. I was happy with my exposure. When it came back into this range, I opened a few more. I think I opened one last week as well, so it would have been somewhere up here. Because, you know, they look like they're going to do well. I don't really use TA too much. I stick with really simple stuff, so using support resistance lines, using channels, trend lines, moving averages, the RSI down here. Again, you can see how oversold it was down here, so this would have been a great signal all the time that it's down at this level, because if you zoom out, you know, every time it's down at this level, it doesn't stay there very long, right? And things turn bullish again. And you can see that it first entered that level down here around this kind of area. So as soon as it broke below this moving average, I felt confident enough to start opening trades. Hope that helps. I just noticed that I don't have my indicator turned on here. How weird is that? Why don't I have my indicator turned on? Because I just spotted someone else asking me a question about indicators, and you can see I've got these little orange dots on here. I've got those on those, but not on Amazon for some reason. Oh well, never mind. Fix that later. I assume it's Chris that is going back and like deleting old chat to make it easier for me to answer questions, by the way. So thanks, Chris, if you are doing that. Thanks for the subscription again with Twitch Prime. Trials Boy Sam. Let's continue answering questions. This may go on longer than I thought, you know. I'm trying to keep an eye on the portfolio as well. Look at this, Home Depot. What a comeback that has made. What a comeback. Another stock that I picked long before this started and decided that I was going to be holding throughout. I did close a few of the positions and re-entered at lower prices. So you can see these are some of the earlier ones, middle of February back here. Great dividend yields. Very excited about Home Depot's potential. I'm planning on writing a post about them at some point. Let's have a look, see what questions we've got. I wouldn't feel safer copying anyone else the way you traversed the recent drop. Love the way you traversed the recent drop. Awesome. Thank you very much, guest list. Hopefully you're still as confident, having seen my kind of blasé attitude towards technical analysis. Part of the reason, by the way, going back to that TA question, part of the reason that that I use such simple indicators like like I have here using the Fibonacci's, is that they're used by everyone. You know, some of the first indicators you'll learn about, as soon as you've learned how a candle works, you'll learn about moving averages. After you've learned about moving averages, you'll probably learn about the RSI. And after you've learned about the RSI, you'll learn about support resistance levels, trend lines, and then Fibonacci's, right? They are just the most common indicators used in trading, pretty much. In analysis, people like to write like fancy bots and stuff that combine them and, you know, draw from all sorts of different things. There are also bots that do sentiment analysis, so they're looking on Twitter to see if people are positive or negative on stocks, things like that. You know, they're all good and they all work to varying degrees, but I like to keep it simple because I'm ultimately an investor. You know, I'm focused on fundamentals, and technical analysis is really more of a way for me to try and find good entry points and exit points, and to, you know, add further validation to my theories of where the price is likely to go. That's how I trade, right? Like if you look at my average trade duration on eToro in my stats page, you will see that it's a month, and that was 1.5 months. It's just rounded back down to a month, so it's actually probably about like 1.2 or 1.4 or something months. And it's only dropped that much because of all the recent insane day trading and active trading that I've been doing during this drop to try and make sure that the portfolio is in a safe position. Just a quick one. What is the best way to see what you open and close and when? Is there an easy way or just manually checking each position's dates? There's not an easy way, unfortunately. Perhaps unless you get access to the APIs from eToro, which I don't have. Someone did do it before. Someone actually created a bot on Twitter that reports every time I open and close a trade. See if I can find it. I think it was called J Trades or something. Or jaynemesis trades. Jaynemesis trades. I don't know if I'm going to find it. eToro? Yeah, I think this is probably it. Yeah, this is it, because he used the little picture with a crown on my head. So this was working for a pretty long time. I can't remember who made it, but whoever it is, it's broken. Please fix it, because a lot of people ask me that. And this little bot used to, as you can see, say new order placed, this price on this date. Look at that. AMD at $12. Oh, if I could buy some more of that at that price, buy it all. Buy the entire company. So yeah, this bot used to work. They used the API to do it. So presumably there's something in the API that you could use to do that still. Not sure why it stopped working though. Maybe they removed it. I'm not too sure. But if anyone's watching and feels like making a bot, please do. Because I found it quite useful, if I'm honest, because I could go back and just scroll through my trades. It was really useful on Twitter. Ooh, look, I've had a response from Samson. This is the guy that makes this web browser. If you don't know what web browser it is, you should all use it. It's called Brave. You earn cryptocurrency for not seeing advertisements. Well, you do see advertisements, but in a different way. I've gone very off topic there. I shouldn't be on Twitter. Get me off here, or I'll never leave it. Sorry about that. Let's close this. Go back over to eToro. Oh, sorry, I get distracted so easily. My head's like all over the place. I think, I don't know if it's a normal, I think normal traders are a lot more disciplined than me. I'm very kind of skittish and my brain's just constantly firing all the time, thinking about things, and getting distracted easily. That's just part of my personality, I think. But yeah, that's what I would, that's the only way you can do it really. Or I guess, yeah, as you said, go through manually. You can see the closed trades pretty easily by just going, so if I go as if you were copying me, click on my portfolio over here, click over here, history, there you go. There's all my closed trades, and it will show you the open date and the close date. And the prices, of course, and the profit. So that's a pretty easy way of doing it. You can click here to see more. If you click over here, you can actually, no, you can't, but on your portfolio, if you come up here, not there. Is it on here? I can't remember where it is. Oh no. Oh, it's in the history page. Yeah. So if you do it via your portfolio, you can also download it. And I would recommend this if you're trying to do taxes as well. If you go to the history tab on your own portfolio, then you can go and create an account statement here. And you can choose the date range, so you can choose your tax year or whatever. It will generate you a big thing. It will split out cryptocurrency returns, all of that kind of stuff. Hand it over to an accountant, and as long as they're competent and you kind of help them understand what's going on, if they've never done capital gains or trading stuff before, they should be able to sort out your taxes just from that, pretty much. So, little tip for you. And also, of course, you can see that will generate like a full transaction log of everything on your account. So you'll be able to see all of the profits you've made, which trader made it for you, which copy trader, all of your fees, everything. Good way of kind of churning through the data and summarizing things. Man, this stream is going to go on so much longer than I thought it would. I was like 1 to 2 hours, that'll be fine. How many questions are they going to ask? I've been live for over an hour, and I'm like not even halfway through this chat. I'm hoping that it's all just Chris replying to people and answering questions for me, but who knows? I haven't even got down to the guys who subscribed to me earlier. Hello, Jay. I'm a small copier of yours. I had noticed that you are selling Toyota. Is there a specific reason for this? Bonus question: are you interested in investing in Tesla in the near future? Thank you again. I am looking at Tesla. I'm looking at Tesla. I have traded Renault and VW quite a bit as well, but my opinion has shifted on Renault especially. I'm much more bearish on Renault. Part of that is because they are half owned by Nissan essentially, and they also half own Nissan. It's very, very weird, incestuous relationship between those two companies. And I don't think Nissan are doing a very good job really, whereas I think Renault are doing an okay job. VW I'm quite bullish on. I think their EVs are looking nice. I like their roadmap. I like, generally speaking, the vehicles that they're coming out with. I like that they pivoted big time after Dieselgate, and I think Dieselgate is still, is still hurting them today, even in terms of investors. A lot of people will refuse to invest in them for ethical reasons. Let me actually I should be more topical and bring up charts or something when I'm talking about these things. So Volkswagen, pretty still kind of bullish on them, but obviously at the moment is not a good time to be investing in car manufacturers. If you look at that chart, look at that. There is definitely some potential with them, I think. I would say that they are in second or third place behind Tesla in terms of EV rollout. And I think if you're investing in car companies and you're not investing in an EV company, you're insane and you're doing it wrong. Like EVs are going to take over this market entirely. The only other car companies that could stay profitable without producing EVs are going to be things like Ferrari, and some of the more luxury cars. Everything is going to be switching to EVs over the next 5 years or so. And even if you just look at government incentives and things for it in different countries as well, the US has obviously been playing around with their incentives quite a bit. But in countries like Sweden and Norway, a lot of the Danish countries, Scandinavian countries, they've been banning cars that aren't EVs from city centres. They've been pulling forward the date for which they are going to basically stop petrol cars from being produced. So that's the trend that you should be investing based on. Clearly, you know that because you said, "Am I interested in buying Tesla again?" I am interested in buying Tesla again. I'm kind of waiting a little bit at the moment to see what happens with coronavirus. They did obviously have an insane rally up to like $900 or so. I rode most of that rally actually. And luckily I decided to sell pretty near the top, I think, before all of this stuff kicked off. I did try and rebuy at one point and then gave up again and closed out at a loss. I think it was around $600 and I sold for like $450 or something. But I think Tesla does have a big advantage. They've got a big lead. What could hurt them is that, I do think the competition is stepping up a bit. I, for example, despite the fact I can't drive, am considering between a Model Y and a Ford Mustang Mach-E, and it was a VW ID3 as well in there for a while, and a Renault Zoe. So, I know my way around electric cars pretty well. It's another industry that I'm just really interested in. And Tesla beats everyone on battery technology hands down, and they beat everyone on autopilot technology hands down as well. But in terms of like the rest of the car, they're still kind of trying to play catch up, and in terms of like the economies of scale and stuff as well. So I think Ford, I think Renault, if they stop messing around with Nissan so much and kind of commit to EVs a little bit more, and I think VW are really good EV companies, but Tesla still the favorite. Still really strong fundamentals. They've already taken out plenty of new debt before this big crisis kicked off, which is great because they'll get a much better rate for it. In hindsight, they look like geniuses for doing that. So they've got plenty of money to keep funding things. China's factory is up and running. German factory is on its way. Tesla looks pretty good for a long-term bull case. And if you don't have any shares, now's not a bad time to be looking at buying some. And I will be adding Tesla back to the portfolio at some point, but I'm not sure I'm ready to do it quite yet. Oof. Maybe I'm getting all these copiers because you guys are watching me. Maybe I'm convincing people. See how many comments are on here. Oh, man, I'm gonna have to do another Q&A. There's no way I can answer all of these. And there's no way all of you guys are going to stay tuned in for this long either, I would think. Do you have any idea or advice about oil trades? No, I don't really trade oil. I'm bad at trading oil. I wouldn't go near it at all in this situation because it just takes Russia or America or the Saudis to make one big decision and it'll change everything. Essentially, it's like trading a crazy manipulated market. I would not bother trading it, if I'm completely honest. Sorry, I was just checking a notification on my watch. Don't understand why people would trade a trader. Yeah, nor do I, really. You can trade anything, I suppose. What's your opinion on the impact of Hashgraph in Bitcoin price? Nothing. Hashgraph has been around for a really long time. It's not an impact. It's a much smaller cryptocurrency. It's not impacting Bitcoin at all yet. There are plenty of currencies out there, cryptocurrencies, that are better than Bitcoin in many different ways. I like a lot of them, but Bitcoin is king. It's going to stay king for a while. If I show you this chart over on this screen, this is Bitcoin dominance. This chart. This is showing Bitcoin's dominance against altcoins, and look at this. It's just been steadily rising since 2018. Since the crypto crash started, basically, this has just been going up. And eventually it may break out, and I thought it was going to break out at one point. But you can see we've got some indicators. I should probably make this full screen, shouldn't I? I'm sorry. I'm so bad at this. You can see over here, though, like it tried to break out down here. We've still got these two dots on the side for the parabolic SAR stop and reverse indicator, which is one that I use that's not so common. I don't think it's going to break necessarily anytime soon. It could do because we've got all of these. You can see all three of these moving averages converging. So maybe it could happen. We did break out from down here. You can see that's where I drew it when I thought it was going to break out here, but it didn't. Yeah, I'm not convinced that it's necessarily going to change for a while, and certainly I don't think Hashgraph is going to be the one to do it. I'm afraid. So I'm sorry if you have invested in Hashgraph and were hoping I'd say something nice about it. What you knew about S&P 500? That's not really a very good question, and I've talked about that a lot, so I won't answer that. How do you choose leverage? You are usually pretty aggressive on them. Wow. How dare you? How dare you, Alien Ad? I am not aggressive with my leverage. I am reserved with my leverage. I'm aggressive with my leverage regarding these. So my short positions, I have been aggressive with. Everything else, I am very unaggressive with. 1x leverage. Generally speaking, I use 1x leverage for everything. I went through a period in 2018, late 2017, early 2018, where I was using 2x leverage on stocks, and it came back to bite me hard in 2018. I learnt my lesson. I had been trading 1x stocks all the time before that, and I went back to it because there's no fees with 1x. And that just means that you can hold it when things go wrong and you're confident on fundamentals. You can just hold through. That's what traders like Jeppe Kirkbond do. His portfolio is long-term investing. As a result, everything is 1x leverage. It means you get the dividends. You don't have any any insane fees or anything, and you can just hold your way through these bad times. And it's an entirely valid strategy. And that's what I do with my stocks, especially during periods like this. So when I was setting up for this big coronavirus crash, I was opening these positions in Home Depot and Netflix and other similar companies that I was confident in. I did it all on 1x leverage, and that's what I do all the time. I use more leverage on indices because typically, until this crash, they fall by a lot less. The other thing is that I have a lot more on money invested in long positions than I do in short positions. So by using leverage, I can effectively double or 5x the exposure to the short side, which means that I can actually balance up the portfolio in terms of making sure that it's a bit more even, so that it doesn't go up by loads and it doesn't go down by loads. It should kind of float somewhere in the middle until I'm more certain of a direction. These trades are essentially hedges. Like this is at a 25% loss, both of these, and I could close them now and go turn bullish, but in reality, I think the price is going to fall. We might not even get back to profit with these, but maybe I'll close them for a 4% loss or something. And if I close it at a 4% loss, then that's fine by me. It means it's done its job at protecting us when we were going up from going up too much. And likewise, when we're going down, it protects the portfolio and makes sure that we don't go down by too much, because this is earning us money to offset against the positions that are losing us money. Hope that makes some sense to you. I keep saying hope that makes sense, but yeah, hope that answers your question. I'm just going to scroll all the way down, see what people are saying. Catching up. Please change screen. I'm sorry. Is dividend any important? Why am I answering new questions? That's unfair on everyone else. I'm sorry. Wow, that's an insane name. You've just typed letters in. You will have to wait your turn. Lots more questions to answer, I'm afraid. Gonna be here for a while. AMD. Word of encouragement or advice for someone who lost 40% equity. If you're not leveraged, hold on. The market will recover. There have been an awful lot of crashes in the past, and new ones always feel dystopian and horrible when you're going through them. I've been through several in cryptocurrencies, and this is now the second that I've experienced in stock markets, and it is pretty heartbreaking when you are kind of caught out by it. But if you've set up your portfolio sensibly before then you shouldn't really be too fearful. There will be some companies that are badly affected. Companies with large debts, or if you're invested in airlines and things, they're going to take longer to recover from this. And that's why it's also important to recognize that when this starts, when these drops start, is look at, okay, what is most exposed to this? What's actually going to be a company that might struggle? And just offload them. If you're down 25% on a company stock and you think it's going to have a really tough time recovering, just close it for the loss. You can't be afraid of closing red trades. Any change in strategy given Trump's new date, April 30th for lockdown versus 12th? Just a day ago. No, not really. We all knew Trump was wrong. This will all be gone by Easter. Nobody was taking him seriously on that. Everyone knew he was wrong. The same with most of the things that come out of his mouth, to be honest. You've got to read between the lines when you're trading, and you've got to realize that it's a bit like in the UK when the government was saying that quarantine will be in a few months and it won't be that bad, and we're all going to kind of muddle through it. You've got to read between the lines and figure out for yourself what's really going on. Reading body language is actually pretty important as well, in terms of looking at what's going on and what's likely to happen. And then you've just got to price it in and trade accordingly. And essentially what I'm suggesting is that I priced that in, you know. I've priced in for there to be at least 6 months worth of disruption in my portfolio, and that's why I'm still holding those shorts. That's why we are still holding on to our shorts, even though reduced a little bit, because, you know, things could change, and there is some positive news coming out of Italy and Spain, as I said, probably about an hour ago now in this live stream. Would it also draw the fib on SPX from top to bottom measure the retracement on the drawdowns? How to see where it retraces high? I think I already kind of answered that for you. I'm not sure if you're asking. So I'm back on the Nasdaq, but I mean, you know, the same thing applies, right? I think you're asking about if we drew it on this rally with a Fibonacci, right? I've done this horrifically badly, haven't I? What am I doing? Do we want to do wicks? I don't normally do wicks, so let's do it to there. And we need to kind of make this look a bit more appealing. So we're going to a 4-hour chart. Yeah, you can already see. It's crazy how Fibonacci's works. It always surprises me. You just draw it and it lines up with things. So you can already see, like where I've drawn this, that this level has already lined up with the top of these candles. This level has already lined up here, and this level has lined up here, and this level has lined up here. It's insane, right? Like how does this keep happening? So yeah, you can use this to look at how far back down this is going to come potentially. 50%, or the 38's probably the safest level up here when you're looking at those kind of things. But 50 or the 60 levels are also good levels for rebounds. But I mean, this is day trading territory, really. Maybe not quite day trading, but there's the decent profit in this if you use leverage to do trades like these. This keeps drawing weirder and weirder as I change the time frames. There's decent room for trading here and making some profits. Like, you know, it's a pretty big range, like 10% or something. But it's not really something that I'm too interested in trading super actively. I think it would take a lot of time and effort to monitor, and I think I'm more focused on the bigger picture, to be honest, and more focused on the daily and weekly charts. So, you know, you could do a trade here. I might do a couple of trades going down there when I feel like this thing has topped out, for sure. But for the moment, I'm going to leave it as it is. What is the average sum people are copying you with? Does it tell me on here? I think it tells me on my stats page. I think it's around $1,000. Sure, that was somewhere. Maybe it is on here. Average copy amount. Is it in this bit? Okay, yeah. So $839 is the average, which is, you know, not too bad. What scares me a little bit about this number is that I think there are a lot of people copying me with only $200, and I really don't recommend copying with only $200. I know that the minimum trade size is $1 per trade, but you've got to think about, you know, really, really small trades, right? Like if I close a trade for 0.1% profit on $1, that's, you know, essentially a penny, right? That's 1 cent. And so if I close one less than that, do you think they're going to round it up? No, they're going to round it down, which means you make nothing even though the trade is profitable. So that would be if you were copying with $100. With $200, it's doubled. This is part of why I recommend $500, because then it kind of covers you against those little decimal points a bit better. The other thing is, of course, that there is potential for drawdown. You know, if I get drawn down by 10, 20%, so many of you watching this now may be drawn down by 10%, then that means that there's 10% less capital there to to be invested in those new trades. If you were copying with $100, that would mean that you wouldn't have enough to even open the trades for the minimum trade size. If you're copying with $200, then it means that those decimal points come into play again a bit more. So that's why I recommend $500. I also recommend that if you can't afford to do $500, absolutely just do 200. If you've only got $500 in your account, then yeah, do 250 on me and 250 on someone else. Try and stay diversified. But if you can, put more money in. Even if that means adding an extra $20, $30, it makes a big difference. Not to mention that obviously compounding interest, like the more money you put in at the start, the more time that money is given to compound and really generate you much more money in the future. As I said, I started investing with a couple of $1,000, and you know, you can see my account balance, and that isn't all from eToro payments, trust me. In fact, none of this is from eToro payments at all. Pretty much everything that's in this account is, just part of the profits that I've made through my trading career. From starting with a couple of thousand. Am I bullish on Bitcoin right now? I'm not sure. Is the honest answer to that? I'm not sure. I'm pretty neutral on Bitcoin right now. I'll bring it up over here, and we can have a look at it. If I can remember where the full screen button is. So here's Bitcoin. We're on that. Oh, I've still got this drawn. Man, look at that. That was from a blast from the past, eh? Get rid of all of this. This is all pointless now. I will keep the one at the bottom though, which you can't really see on the screen at the moment. This one along here. I can go to this as well. Blimey. What am I doing with my life? I will put it on a daily chart, so it makes a bit more sense. Yeah, so I thought we were going to come back down and retest this 4K level. Back down here again. We haven't. We've managed to stay up here. There is a big... I should probably draw the line back in. I actually moved a bunch of lines. I had too many lines drawn on this chart, so I removed a bunch. So there are some support and resistance levels within here, obviously. If you look over here, you can see we're kind of in this nice gap at the moment in terms of volume at different price ranges. So we could stay in this range for a pretty reasonable chunk of time. I wouldn't say I'm bullish or bearish. I think we're going sideways. I also have said on numerous occasions that I think we are following the equities markets. And if you compare this with the SPX 500 or the Nasdaq, you can actually see a pretty clear correlation. In fact, I'm going to very quickly just kind of line this up roughly from one screen to the other, he says. And then switch it on you and see if you can kind of see what I mean. I mean, not so much before the drop, but when the drop happens, if you look at this and you look at this, you can see the same drop, right? Like the drop down here and then the bounce. And if we go back over to the Nasdaq, you can see the drop and then the bounce. Same thing. It's difficult to show it in an exact kind of time thing because obviously these markets close at weekends and they gap down and all sorts of things. So this is more of a squished chart than the Bitcoin chart. So they won't marry up very well. But essentially, you're seeing the same sort of thing. They weren't very correlated, and then when this drop happened, they decided that they were going to behave exactly the same. So if I believe the stock markets are going to come down, if I believe the Nasdaq is going to drop, then I also think realistically there is a pretty good chance that we're going to see Bitcoin drop. Okay, so that's my view on that. I'm just going to scroll back down. How am I doing at switching screens? I think I'm doing okay. I think I'm doing okay. I seem to be catching up slowly but surely with all of your questions. Viewership is slowly diminishing as people give up on their question ever being answered. Sorry about that. Yeah. Still on SPX chart. Oh, sorry. That would have been earlier. Another thought on medical firms. Many will also suffer. Only the one with something big breakout will prevail, and we do not know anything specifically yet. Yeah, another reason that I'm happy that I invested in Gilead Sciences before the rumors of their vaccine came out, right? Like I was already pretty bullish on the fundamentals of them, and on how the company's performing, their balance, their dividend yields, all of that stuff, the general consensus, analyst targets. So I was happy with all of that before rumors of them coming out with a cure came out. So the cure was just a bonus for me. If they come out with a vaccine, cool. If they don't come out with a vaccine, I'm not too bothered. It's also why I think it's risky to try and invest in anything that is doing that. There are some companies that claim to have the vaccine for all sorts of other major pandemic threats in the past, including SARS, and they didn't actually deliver on it, and their share price came back down. You know, it's just not worth investing like that, I don't think. New question here, but why does indices like Nasdaq and SPX start before the markets open? So eToro basically uses futures markets for those for some of its indices. So the German market opens before the actual German market opens. So it starts as a futures market and then it converts into the normal market and then it goes back to futures market. The same with the Nasdaq and the SPX 500, UK 100 FTSE, that doesn't do it. Spanish markets, they don't do it. The CAC 40 French markets, FRA 40, that doesn't do it. So, you know, some of them do, some of them don't. That's part of the reason that I like to trade the Nasdaq specifically, but also the SPX 500, is because they trade over overnight, and I prefer that because it means more trading opportunities. And less gaps. Gaps down are pretty nasty things sometimes, so I don't enjoy those too much. Why are you trading with less in eToro than you were 2 to 3 years ago? I'm not. I guess technically, yes, I am. Technically, I am. So if we go to let's see. If we go to my chart, you can't see it all, right? Because this only goes back to like the middle of 2018, early 2018. This was basically the bottom of the drop from in 2018 when I was having my disastrously bad year, right? I think. Was that 2019? Yeah, that's 2019. So it would have been before that even. But anyway, the point is that if I could draw this chart properly, you would see like a big U shape, a big cup and handle that has formed essentially, where I got massively drawn down, 50% loss from 2018. And then I started to regain it in 2019, didn't regain it fully, so still behind where I was at the end of 2017. 2020, recovered a bit more, and soon we will be above where we were back then. Right here was actually roughly the highest equity that my account has had. So only because of this big drawdown are we actually lower than we were at the end of 2017. But again, that just goes to show that, you know, even when I had a year as bad as that, which I really do not plan on repeating, and as I said, I've made some significant changes to the way that I trade since then to make sure that that doesn't happen again. Even since then, we have almost recovered it all. So if it's 53% down, then that means you obviously have to make 106% or so to make it back. We made half of that here, and until this big drawdown, we were up to, at like 38% or something in here. So we're well on track. We're only like 10% away before the recent drawdowns to getting back up to the highest the portfolio has ever been, which was back here. And don't forget, you know, that you're talking about the very, very peak was the last time that I was doing these streams, the last time that you saw my equity. So right here was like a 27% gain and then another 23% gain, one after the other. And then you were seeing my balance here, so it would have been about 45,000, if I remember right. So, that's the highest it's ever been on this account. So yes, we are below it at the moment by $9,000, $8,000 or so, but that's pretty recoverable. I lost $4,000 or $5,000 in the last week from the drawdown. Just got to the bit where everyone's telling me to change screen and that I'm a noob streamer. Let's see how long before he notices. Oh. Let's scroll all the way down, see if you're still complaining about me. Thank you very much for answering, Jay. Not a problem. Not a problem. My portfolio is just totally flat today. Look at this. Totally flat. Well, we've made 0.06%. Don't say I never do anything for you guys. Obviously, this isn't what a normal trading day is like, by the way. I do not normally just sit here and casually just look at it and go, and then kind of turn away. Spend a lot of time researching. And I'm a big fan of listening to earnings calls for the stocks that I'm invested in as well. I listen to almost every earnings call. Trying to find where I was. I've lost it. Oh no. He scrolled half an hour further back. He'll see that later. Are you going to start streaming again regularly? Maybe. Maybe, Rick. We can all dream. I do plan on streaming more. I think it's difficult to do that at the moment because I just have so much that I want to be researching and doing. And then by the time I finish doing that researching, like I mentioned right at the start of the stream, my sleeping schedule at the moment is just crazy. Because I'm trying to keep track of things so much. So I don't think streaming is really a good idea. I also, when I look back at how I used to stream, it did distract me from doing my job as well as I should have been. So I may start streaming again, but when I do, it may not be quite the same sort of format. I'm happy to do more things like this in future, and clearly there is more demand for it than I'm capable of filling, given that I've been on for 1 hour and 47 minutes and I'm about halfway through the questions. Clearly there is plenty of demand. So yeah, I would like to stream more, and I would like to create more YouTube videos, and I even bought a microphone for my camera to go and record some videos on all sorts of things and just kind of talk at the camera more like a vlog as well, and just kind of vlog my trading journeys. But never really started, and then by the time I was kind of preparing to start, all of this happened. So we will see. I did make some big changes in like my work-life balance recently, though. I was working on a separate project outside of eToro and trading entirely. It was taking up a lot of time. I was really passionate about it, but I was just not capable of doing both at the same time. And as soon as I stopped that, my trading improved, my happiness went up. Chris knows what I'm talking about, and probably some people in chat even know what I'm talking about. But yeah, so I stopped that, and I'm feeling better. I've got a bit more free time, so I would like to start doing more content. Chris chatting about some front end stuff. Do you think CFD will go down like DJ, SPX, or something? CFD? And will there be the recession? There's definitely going to be a recession. The US was actually kind of teetering on the edge of a recession a little bit anyway, as were several other nations. The UK, for example, wasn't looking super healthy, given Brexit. And even the car industry as well. So Germany was pretty poorly hit by the electrification of the car industry as well, and that was really hurting their economy. So yeah, there will be recessions in most G20 countries. I would say the majority of G20 countries will be in a recession. the majority of countries outside the G20 will probably also be in a recession, to be honest. Anywhere that relies on tourism, Latin America, Southeast Asia, a lot of the big tourist hotspots will be hit pretty hard until the airlines and consumer confidence recovers. Many governments are declaring unlimited quantitative easing. What does this say about the way the whole financial system and how they are governed? It tells us that money is invented, and even when you just keep inventing more of it, you can still somehow keep functioning. Quantitative easing in itself is not a bad thing. As I said earlier, I'm a fan of Keynesian economics, and I think inflation is actually a very, very useful tool for controlling the economy. The problem comes with fractional reserve banking and debt generally. The problem is that when we create this new money, we don't distribute it evenly to people. I don't get any extra money when they print out their, new bills. It all goes to the banks. And so the banks get to spend it before the economy has adjusted for that new money. Not only do they get to spend it before the economy has adjusted and pricing has adjusted, so they get a better deal than anyone else, and they get the benefits from it because they get the money. Not only that, but they do it with fractional reserve banking, which is should be in many ways a crime, in my opinion. I know that we've kind of built this crazy system and that it's just kind of part of how things are done now, but realistically, the entire concept of fractional reserve banking is really flawed, and I think that is a much bigger problem than quantitative easing. Although, again, quantitative easing, when they print that money from a central bank, the central bank charges interest on it. They want that money back. This is why you have the debt ceiling in America. I could talk about this forever. Ludicrous concept. They all argue about if they're going to move the debt ceiling, and if they're going to change it because they don't have enough money to pay it back, and then inevitably they always do because there's not enough money to pay it back, so they have to. That's just the way the system is designed, right? In my opinion, it shouldn't be given out as debt. Central banks should be run directly by the government and should not be private corporations and companies asking for money back. It's just ludicrous to me that that's how it works. But that is how it works, so we have to trade and play the game by its rules, and that's why Bitcoin exists. And I think Bitcoin will serve its role eventually in teaching people that that's not a very sustainable way of doing things. Again, I don't think inflation is the enemy. The issue with inflation is that it's issued as debt, and you have to pay that debt back at some point, and it's impossible to pay that debt back plus interest because you'd have to print money to pay the interest. There's not enough money in the world to pay back the world's debt. So yeah, that's I guess that's what I think about that. Hopefully at some point it will change and become a little bit more sensible. Again, inflation isn't the enemy, I don't think. Inflation is really useful, but quantitative easing in its current form, and then fractional reserve banking, not great. And I do hope that those practices come to an end soon. And I make a point of trying to, in terms of personal bank accounts, pick banks that don't engage in that. So I use a building society in the UK called Nationwide, and they don't do any of that kind of rubbish. So I'm happy about that, for the most part, at least. Not that I'm aware of. Good question, though. I like it. What is the idea or philosophy behind buying a lot of different stocks instead of buying a few that you know a lot about and are sure they will perform the way you're expecting them to? Another question is there a rule of thumb for when allocating your funds to stocks, etc.? Okay, so first of all, we'll take a look at my portfolio and see what's in it. So generally speaking, I don't really think that I invest in that many things. I haven't counted here, but I would say there's probably like 25, there's probably more than 25 at the moment, like 30 or 35 instruments that I'm trading right now. 35 different things that I'm trading, have positions in. And some of them are actually kind of like direct counters to each other and stuff. So for example, the indices that I'm trading, German, the DAX 30, the Spanish markets. We've got, this is the Russell 2000 that I mentioned earlier. We've got the Nasdaq, the SPX, UK 100, FTSE 100. I kind of basket all of those into the same sort of category, really, right? Like their exposure currently to the short side of an entire market. And they are a hedge. And they all, like, I don't need to research about the FTSE 100s and the SPX the same way that I have to research about something like Netflix, right? Like, it's just not comparable. This is a basket of 100 things. It's like a benchmark and an index. And so, you know, the amount of research required for that is obviously a lot less. So that kind of rules out those ones a bit. In terms of companies, I do try and stay on top of them, and it can be a bit difficult when I'm at as many as I am now. And usually I would say I have a bit less than this. I usually have about 15 to 20 different stocks rather than quite so many as here. But they all do follow very similar themes. They're all in like the same markets. You can quite easily split up my portfolio into a few different sectors. So for example, gaming. We have Ubisoft. I'm pretty sure Activision Blizzard is in here. Sony. You could kind of count Disney in it a little bit. We have AMD kind of counts in it a little bit. And we have Tencent somewhere as well. I think I scrolled past them. And Microsoft. So all of those are in like the same category, right? Which means I'm bullish on that sector as a whole. And then I've gone into that sector. I've picked out the companies that I like the most. And those are the ones that I've picked as what I want to have positions in. Some of them will be more like day trades. And some of them are not. The other reason for kind of splitting it across there is that even within that selection, I've got 3 different jurisdictions in there. Ubisoft is on the Paris stock market. Tencent is obviously over on the Hong Kong or stock market, I think, wherever it is. Tencent. I've lost them. I'm pretty sure they're on the Hong Kong stock exchange, and then obviously we have quite a few on the US stock markets. So that's another reason for doing it. You'll see the same when we go to, for example, renewable energy and environment, right? So we have Veolia, they do waste collection, recycling. They're on the French stock market. We have, what else have we got? Probably nothing. That'll be for, we had Logitech, so Swiss. So that was another one that we had for gaming as well. I scrolled over. So we had four different regions covered to help diversify. Yeah, we have Ørsted Co. So that's wind energy. Zinyi Solar Holdings, that is over in China. So, you know, there's quite a few in that sector as well that are in different markets. Obviously, I don't have much exposure to that sector at the moment. SolarEdge and Enphase Energy are my go-tos in that sector. First Solar, I also traded them quite a bit. But I have reduced exposure because I'm not super bullish on it at the moment. But I still want exposure, and I'm still split across 3 different markets with what I hold even right now. And the same goes, you know, I could keep going through this for everything, but the same goes for tech sectors and everything else, right? So they're still theming to my investing. It's still basically, you know, electric vehicles and cars. There's some stuff that is more focused around e-tailing and online retail. There's some stuff that is more specific to this specific market conditions, such as the Chinese railway construction. These guys are basically just people that make every railway in China for the most part. And when China gets in economic trouble, what they tend to do is build more infrastructure. And so that's why I opened this position. So that's why I try and diversify a bit more. I still get some positions that are way bigger than others that I'm way more bullish on. Microsoft, Home Depot, both great examples of that. Netflix again, Amazon. You know, you can see a big difference. And then there's lots of positions down here that are just tiny positions, $400 for all of these, because they're just like little bits of diversification. The point of them is to diversify a little bit and make sure that all of my eggs are not in one basket and I'm a bit more exposed to the broader economy or the broader sector. I'm currently holding any stocks in water and renewable energy. None in water, but yes, I talked about renewable energy just now. Orsted Co, Zinyi Solar, and there was another one, but I've forgotten it. Veolia, which is recycling, waste management stuff. I will be putting more back into Trig L on the London Stock Exchange. They're just like a solar holdings company, very similar. Well, not really similar to Zinyi at all, actually, now I think about it, but they're another company that I might do that with. And of course, SolarEdge and Enphase are both on my watch list. Jay, don't you think it's possible that the markets keep going up since the Fed just keep throwing money in to avoid it from dropping? Yes, it is possible. And I have to prepare for that. And I think I have prepared for that reasonably well. As you can see, my portfolio is pretty flat today. I'm actually pretty neutral on long short. But also, like, you've got to consider that I'm also exposed to other countries as well. And as much as the US keeps throwing money at things, countries like the Philippines, Indonesia, which are at the bottom end of the supply chain, they can't do those things, and that will still have knock-on effects if Apple can't build their iPhones because the country in which they build it in is totally crumbling. That still has a negative impact. The world is so connected these days. Is this possible at the moment? We get rid of the shit companies. I don't think I've got any shit companies in my portfolio, apart from the ones that I'm shorting, such as Toyota. There are a lot of fund managers with less AUM. Yes, there are. 26k. Thanks for answering, Jay. Almost 20% down here, but I know it's really hard times now. Is dividend any important case of trading? Yeah, I mean, dividends is a strategy that I move towards because of the current financial situation, right? If this drags on for a year and the market goes sideways and we're holding our Home Depot shares in this kind of position, we're still going to be getting that nice fat yield from it over time. And, it won't, that's not going to make us loads of money. The point of the dividends isn't to make us loads of money. It's to make sure that we're making something while still investing in companies that I think are going to do well when the recovery starts. So again, another 3% yield. They also do a lot of share buybacks and stuff in Home Depot. And I'm pretty bullish that they should recover reasonably well because, they're not competing with companies like Amazon. You can't deliver a piece of pipe very easily. Like, it just doesn't make economical sense. So it's a retail environment that should do well during the crisis. Great work on trades. Question about eToro. On any trade you close for us, can you confirm if the profit is reinvested by yourself or just held in the profit? The profit is still kept within the copy of me. So if you are copying me and I close a trade, the profit from that trade goes back into the pot of money that is copying me. And the point of that is that otherwise you would actually desync with my portfolio, and you don't want to do that. So it's there ready for when I open a new trade. If I open a new trade with 1%, it will use 1% of those available funds, which will be higher because I have just closed a profitable trade, hopefully. And that means that the money that you have invested in me will compound. So you don't need to pull it out and put it back in order to get any compounding. A lot of people ask me questions about that as well. It all kind of just works. Only trading with 30k while getting 27k a month. Yes, at the moment. At the moment on this portfolio, yeah. I've considered adding more money to it, but in order to do that, I would really need to get the portfolio flat. It will, if I add or remove money to my account, it will send out an alert to everyone, every single person on my copier list, and tell them to do the same. So if I withdraw money, it automatically withdraws money for everyone copying me. If I add funds, it will send out a notification to everyone telling them to add funds, and it can cause copies to desync, because if I have 100% of my portfolio exposed, and then I add another 30k, for example, right? So let's just say that I've doubled it, and then I invest that 30k immediately. If someone hasn't added double themselves in their copy, they don't get any of those new trades. It just doesn't work. And so there's no way that I can guarantee that everyone's going to do that. So I just avoid it. I don't need to put more money into the account, so I don't. If eToro changed the rules that I needed 50k or something, then I would do that, but I would try and flatten out the portfolio first, which basically means removing all exposure and then adding funds. So that's the reason that I don't add funds to this account. That's the reason I haven't done it for several years. What are your specs for your machine? They are in the description in Twitch below. I currently have an Intel CPU, which is terrible and overheats all the time, so I had to underclock it. It was very frustrating. Fully water-cooled system. Yeah, that's it really. Yeah, and yeah, it is a pretty fast computer. 32 gigs of RAM. I've got a 1080 graphics card, so not that new. NVIDIA 1080. Doesn't use too much power. 550 watt power supply. Very fancy looking case. Very difficult to build in. Mistakes were made. Jay has 3 accounts, if I remember correctly. Oh yeah, I think I skipped a question. Someone asked about my second account somewhere. Yeah, I have a second account, jaynemesis_2. eToro has just changed the rules on it because they don't want anyone to potentially front run the markets or do anything crazy. They delete my account. That's concerning. Well, I did just say that they had changed it. They sent an email out a while ago saying that they were changing the rules on it and they were going to stop people from being able to add funds or do anything with those accounts because they were afraid of people potentially front running the markets. You know, if I had $25 million in AUM and I go to a reasonably small stock like Wix is reasonably small, I think, in terms of market cap. Okay, well, they're still pretty big, but let's say I went to them with, like, 50 or 100 million AUM or something, and I bought like 3% of the company. Obviously, the share price would jump up by more than 3% because I've just bought all of the available liquidity for that market. So what I could, in theory, do is on my second private account, open some trades in Wix before I do that, and then buy it on here. Close my trade on my second portfolio and then close them all again on here, and I've made money and none of my copies have made money, and so they wanted to remove the possibility of people doing that. I don't think anyone has done that, to be very clear. Very sensible thing for them to have done. Hopefully I'm allowed to tell people that. I mean, it's a pretty sensible precaution to take as AUM is growing for the big PIs. I don't think I've got the highest AUM. I think Olivia has slightly more than me. But you can see that with this much money, there are some potential loopholes that could be exploited, and so eToro has basically closed those loopholes. But that second portfolio, the point of it was just another portfolio for me to copy other people, because I don't think it's fair if people are copying me for me to then just copy other people that maybe I'm not researching as much. I believe in my trading more than other people, but that doesn't mean that I want to put 100% in my control. And as I said, I can't really add funds to this account very easily anyway, with the way it's set up. So that's why I had a second account. I wanted to diversify, I wanted to copy other people, because I think there are plenty of other great traders on eToro. And the third account is just for eToro to pay me into as well. What stocks are you holding in renewables and water? I answered that already. I think I've gone backwards. What am I doing? I'm all over the place. Lots of people talking about APIs and stuff. We missed you. When are you doing a 24-hour stream? At this rate, now. I've been on for 2 hours and 10 minutes. Luckily, it seems to be a really quiet day in the markets. Really bizarre. I should have shorted the VIX. Let's have a look at the VIX. But that's gone, yeah, it's gone down a little bit. Not very much. Yeah. Are you still bullish on SolarEdge? I love SolarEdge as a company. Absolutely love them. But we've got to be realistic. There is nobody in their right mind right now is looking at installing solar panels on their house, you know? And I realize that they do bigger installations and they work with home builders and things like that. But, you know, the majority of their money comes from selling the, what's it called? I forgot the name of it. I've forgotten the name. It's totally forgot. Which is frustrating because I've got one literally behind that wall in my garage. But anyway, yeah, most of their money still comes from you know, retail installations through third parties, and those are going to dry up until the economy starts to recover. Simply because, you know, people don't want to spend money when they don't know if their job's secure, and they don't know what the future is going to hold. And not to mention that obviously, if nobody's working, everyone's in quarantine, nobody's getting solar panels installed right now either. So that's the reason that I am not currently holding any SolarEdge. I would absolutely love to return to them. I think they're a fantastic company. The old CEO, who unfortunately died last year, was really, really good. I think the replacement is doing a good job so far as well. Do you still have that Tesla Model 3 order? No. As I said, changed what I was looking at. We're considering between the Ford Mustang Mach-E and the Model Y now. And I think we're leaning towards the Mustang Mach-E because then I can tell people that we own a Mustang, which will be really fun. And then they'll find out it's the electric one. They'll all be very disappointed in me. What do you think about Gilead's chances of approval for the drugs? Good. Yeah. So it's been a while since I really looked at it in terms of, because I know that effectively most of their money comes from just that product, or they're hoping it will. You know, I don't know, to be honest. I just don't know. I think it's in phase 3 now of trials, right? Or phase 2 or phase 3. I can't remember. But yeah, I mean, all I can do is say I hope so. You know, they know what they're doing. I'm not sure, to be honest. It's I haven't, honestly, if I'm completely honest, I haven't looked at it since like January is the last time that I read up about it. So it's just not fresh in my mind at the moment. So I can't really give you a very good answer on it, I'm afraid. Please don't buy a Ford Mustang, they're so vulgar. But it looks nice. Have you looked at it? It looks delicious. The Mach-E looks so good. Chris agrees. Yeah, that was me in 2013, 2014, Chris, you're right. It looks like I was going to say it looks like I'm almost caught up, but I'm really not. I'm really not. But it does look like questions here are drying up. So I want to make sure that I get through the questions people asked me on eToro. So that's what I'm going to go and have a look at now. Try and get through them. I imagine there's loads more by now as well. Just for the guys that decide to watch this afterwards, I'm going to have to try and timestamp the questions and stuff on YouTube, I think, as well, to make it easier, because this has gone on much longer than I thought it would. Man, I didn't get very far at all. Someone asked if now is a good time to add funds. Check the blog post on my website about that, jaynemesis.com/blog-1, or just jaynemesis.com and then press the blog button. I need to change the URL. I don't know why it's got a 1 in it. I'll get around to it eventually. There's a blog post on there that tells you about when is a good time to copy and when it isn't. Long story short, there is no good or bad time to copy. It all depends on if you're copying with open trades or not, and of course your personal circumstances and what you're willing to risk. What impact do you expect the halving to have on Bitcoin and the alts? To what extent do you think it is already priced in? I don't think it's priced in because coronavirus has kind of screwed everything. It's really hard to tell, to be honest. It's really, really hard to tell. I think when the dust settles, when coronavirus is out the way, Bitcoin should be back above 10K again quite comfortably. So, you know, for me, that means 2021, realistically, if we're being honest. It may go up before then. Really depends on coronavirus. But it's hard to really give an exact kind of range for that. Bitcoin is just so difficult to predict at the moment in terms of what it's doing. What do you think about SPX and Nasdaq for this week? I've kind of answered that already, Drew. So I answered those kind of questions pretty early on in the live stream / YouTube video, depending where you're watching. Hey Thomas, how's it going? Welcome to the stream. I'm still really far behind on chat. I haven't even bothered to catch up on it and read it all. Yeah, because I had so many questions, I haven't bothered to read it all. I've been streaming for almost 2.5 hours now, and I'm just trying to get through these last few questions on eToro for this Q&A. And then I'll try and maybe read the chat, depends how long this takes. I was hoping to only stream for like a maximum of 2 hours, but I can extend it to 3, I think. And, you know, my voice is starting to go now. And I'm running out of Pepsi Max Cherry. Other beverages are available. Enjoying the stream. What do you think of Zoom? I was wondering when someone's going to ask me about Zoom. Do you think it topped out? There's also been mass onboarding of companies using Microsoft Teams. How much difference do you think this will make to the share price? For Microsoft, it will not make very much difference because Teams is probably one of their smallest products. Google Drive may see a nice boost, though. And, you know, I also think the Azure Web Services will be seeing a very, very healthy boost from additional internet traffic, and that's where I would be looking to see a big uptick in revenue during their next earnings call. With regards to Zoom, let's have a quick look at Zoom. I can't actually remember what their ticker is. Is it just Zoom? I think it's like ZX or something. I guess it is just Zoom. Or is it ZM? Yeah, ZM. That's the one. Yeah, so Zoom. Is this Zoom? I'm not convinced it is. Let me check. Let me just check on the eToro, see what the ticker is. I think it's ZM. Have they really been trading that long? I thought they IPO'd much more recently. Oh, apparently they have. Who knew? Not me. Maybe they just got added to eToro. I'm not sure. Maybe I just never noticed. Anyway. Yeah, I mean, like, this valuation's insane, basically. You know, Zoom is a good product, and I've used it with numerous people before, including eToro, with meetings with eToro before. You know, I like Zoom. It works well. Realistically, should it have jumped in value by 2x or like 50% or whatever it's been? No, to be honest. It's not, yeah, it's 2x since here. It's 2x, 75 all the way up to 160 at the top, 165 even. Yeah, no, it's a ludicrous valuation. When you actually look at you look at the market cap and stuff, like 42 billion market cap. Price to earnings ratio is hilariously bad. You know, like look at their revenue. It's yes, they're going to see a jump. They're going to see like 800% jump in people using Zoom. Most of those people are going to be using the free version, and maybe some of them will get converted. But we're not going to see like anything insane. Their earnings report is going to come out in a couple of months' time, and it's going to be, I'm on the wrong screen. It's going to be disappointing. Yeah, look at this. Look at this price to earnings ratio. That is insane. Insane. Like, let's compare this to some of their competitors even, who will also be benefiting at the same time. So we can use work, which is Slack. We go to Slack and we go to stats here. Okay, price to earnings ratio doesn't actually show up, but you can see that their market cap is way lower, and it's just because they're less talked about. We can go to Team, which is Atlassian. They make HipChat and other similar products, and other things that would be useful as well during this time for managing staff and things and workloads. And again, their market cap is lower. It's insane. Zoom makes one product. And their market cap is higher than these companies that make things like Jira and stuff. Like, it's absolutely insane. Not to mention, obviously, Microsoft Teams, Discord. Like, there's so many alternatives out there that people will be using. Telegram, people will probably be using WhatsApp. It wouldn't surprise me. So yes, Zoom is a great product, and I really like it, but the valuation is insane. And anyone who is bullish on it right now is insane. I did consider shorting it, but I decided not to. I actually instead decided to open. I did a trade in work in Slack. Why am I searching? I just have to scroll. It's probably like a week or so ago. I made a nice profit in it somewhere. Wow, it's further back than I thought. I've done a lot of trades. I don't know if I used to take profit. Maybe that's why I haven't spotted it. There we go. There's work. I did a little trade on it, a little day trade. Very little, a couple of hours, in fact. And like, and the same with Team. Like, I bought some Atlassian because they make much more products than that. And if that Zoom valuation does continue to hold out, then I think we'll see companies like Slack and Atlassian catch up a bit. Yeah. Let's try and get back to the questions. Just saw the notification just now. Any merits to the ultra bullish view on gold? I've heard really crazy theories. 10k, 50k. Wow. I mean, 50k is just ludicrous. 10k is pretty ludicrous. I don't buy it, to be honest. I don't buy it. Gold, interestingly, did exactly the same as Bitcoin and everything else. They all dropped. Everything dropped. Gold dropped a lot less, yes. If you measure it from like the start of the year, gold is probably up by like 2% or something. But yeah, no, I don't buy that gold's going to do well. I don't really like trading it either, to be honest. Yeah, but in terms of Zoom, I just keep going back to Zoom. Like, what is going on with this share price? Like, it's just. I mean, I know it's been higher before, but like they just don't have the numbers to justify it. I don't think the fundamentals aren't there on Zoom. I don't know if I would short it. As I said, I thought about shorting it, and I decided to invest in other things instead. I think you're better off just putting your money in Microsoft, because Teams is also seeing growth. Azure is going to do very well. All of the Microsoft productivity suite is going to do well. Microsoft Office, Microsoft OneDrive, I think they call it. The new Xbox is coming out soon. The Surface tablets are really good. The new Surface phone looks super, super interesting. Whatever they call it, Surface Fold or whatever. Folding phone looks really, really well done. The new web browser is fantastic. They've just announced a cryptocurrency that's copying basic attention token, essentially, from what I can see, that's going to be built into their web browser, copying what Brave is doing. Microsoft's doing a lot of really smart things. And also Teams, I believe they are working with, it might have been Zoom actually, or Slack. I think it's Slack. They are actually standardizing with Slack so that you can have calls from Slack to Teams without any, additional software or anything required. And you can they're both interoperable and compatible, which is really, really good, really smart move. Yeah. Even your university is using it right now. Yeah, I think it's just the hyped thing, and they will do well. But I think buying it is such a risk at these prices, such a risk. Like it's just not worth the risk. Like if you manage to buy it before all of this hype, and obviously I wish I had done that as well, but it's just not worth it. Microsoft Teams and Classroom or something went into all schools in Poland. Yeah, that makes sense. That makes sense. Let me try and go back to the questions. I'm sure people are still leaving questions on here. Oh man, there's so many. Okay, so I've answered Captain Knight 00. This person is undoubtedly asking about oil. Do you think oil goes up or can it go down again? I don't know. I don't trade oil. A few people have asked me about oil. It's just not something I really trade, to be honest. I'm just not comfortable trading it, and it really is impossible to tell because it all depends what Russia, America, and the Saudis decide to do. Saudi Arabia and Russia could just stop producing oil tomorrow and the price would go up. If they could reach an agreement, the price could go up. Who knows? What's your plan for when the bottom has been hit? Close the shorts, keep a tiny bit of short exposure in case I'm wrong. Keep a little bit of money on the side in case I'm wrong, and start to load up on more shares of many of the companies that I already have shares in. I also think some travel companies could be appealing, but really we've got to wait for bailouts to see for sure. I did do a trade on Airbus recently in France, and I think things like that could be appealing. But generally speaking, I think it's going to take a while for that industry to recover. But there is opportunities there potentially. They may do all sorts of things to try and lure in investors. We'll see. But for the moment, I think looking at the renewable energy industry that I've traded a lot, looking at the car industry again, that I've also traded quite a bit. Gaming industry is still exciting, and of course 5G and hardware and CPUs, all of that stuff that I usually trade. I'll continue trading that sort of stuff. Don't you think the market doesn't care about coronavirus numbers anymore? I think they care about it quite a lot, actually. And I think that is precisely why this rally happened. I reckon if I click on here and I go to Italy and we look at their numbers and we go and we look at this chart, I'm going to cover it up, I'm not even looking, I can pretty much guarantee you that the market bounced the day the number of new cases in Italy started to go flat. Right, let's have a look. So I need the market up here. Let's have a look. We'll use the Nasdaq because that's just my preferred NDX. Okay, here's the Nasdaq. We're going to full screen it. Oh, that was the wrong full screen button. We need this full screen button. Okay, so we're going to call the bottom anything between the, let's say, the 18th and the 23rd. 23rd was the actual bottom. Let's have a look. Okay, so the 20th was the highest number of cases, daily cases they ever reported. And the 23rd was looking very bullish. 23rd and 24th was looking very good. There you go. I rest my case. I rest my case. People are looking at these numbers and they are looking for when the curve gets flattened. And the curve will get flattened in new cases before it gets flattened in deaths. And so they're looking at cases first and then deaths. The deaths is going to be about 1 to 2 weeks behind the cases because it takes a while for people to actually die of the virus and to actually even develop the symptoms after they catch the virus. So that's what people are looking at. Italy is obviously just one example, but Spain will be the same, but a week later. They have started to flatten out very recently as well. You can actually even see it on this curve a little bit where they've started to flatten out. And if you go into logarithmic, it becomes much more obvious that they're flattening out. And again, here you can see several days ago is when they actually had the highest number of daily cases. Today they reported about 5,000, I think. Yeah, 5,000. So yeah, the numbers are more relevant than they have ever been. If you're not looking at these numbers every single day, as depressing as it is, and pretty horrifying, things are starting to look a little bit better, and that is why we have bounced. And the point at which we will come back down is the point at which the economic reality starts to hit people. That's what's going to cause the market to go back down, not the fact that I've just realized I'm on the wrong screen. I've done it again. Done it again. Here's the screen. Here's the numbers. Italy. Look at this. Can't believe I've done it again. What is wrong with me? I bet you're all screaming at me. Yeah, you're all screaming at me. Oh, I should just leave, shouldn't I? Just give up. I'm a trader, not a streamer. I do try. I'm just really bad. I need to just hire Leanne. Well, I have hired Leanne. Maybe I should just bring Leanne in here and just tell her to press the buttons to change the screens. Oh, no. I've done it again. Anyway, point is, I was right. Look, we're on Italy. Daily new cases in Italy. Look at that. That is the 21st. I said the 18th would be where the first bottom was on the chart, and then what was it? That was the 23rd, and so you can see 23rd was literally the lowest amount. That was the day the market bottomed on the Nasdaq, was when Italy reported their lowest number of cases in basically a week, and where it was obvious that the curve was beginning to flatten. And with 5,000 a day that hasn't been added yet, you can see that it's actually starting to come down. Thank goodness for that. And then, as I said earlier, you can actually see it on the logarithmic chart as well. Very easy to see the cases there flattening out. And then, again, because you missed it, I'll show you Spain. Here is Spain. Here is their logarithmic. Again, you can see it flattening out a little bit. It does flatten out a bit anyway, just because of, the infection rate isn't quite logarithmic, because obviously we're in quarantine, so it's not gonna, it's not going to grow at the rate that it normally would. But you can see here that it is on its descending again, back down to more manageable levels, which is obviously very good news for everyone. It means that quarantine works, eventually. Lockdown works. It just takes a bit of time. And we suspected this was the case because of China. Back to the point, though, of the question, which I've now forgotten. Do the numbers matter? Yes, the numbers matter. Essentially. I can close that now. Don't need that open. Yeah, the numbers matter a lot. Thanks for the stream. Got to go. Wife's sad because I'm hanging out with some dude online. I'm so sorry. Please pass on my apologies to your wife. Let's keep going with some questions. I know the viewership is starting to dwindle. It's been 2.5 hours. I can't believe you've all lasted this long. Again, big thank you to everyone that decided to subscribe with Twitch Prime. I really did not actually expect that at all. Very kind of you all. I suppose maybe you just don't use Twitch and don't subscribe to anyone else. I really, obviously, you've seen my salary. I don't need the money. Maybe I'll do a thing where I donate it all to charity or something, all the people that subscribe on Twitch. That would be cool. So you just said earn some more money. You can tell her that I've earned her minus 0.01% so far today. And that I apologize for that. And I'll do better tomorrow. Right. Sorry, what I really should have done is overlaid the chat on the screen, because everyone that's watching this on YouTube afterwards is going to be wondering what on earth I'm talking about and why I keep going off topic. I'll fix that for the next stream. I actually thought I had it set up, but clearly I do not. Oh, what does this button do? Someone type something quick. Maybe I'll type something. Test. Did it work? I don't think it worked. What if I bring it? Can I bring it forward? Maybe the layer's too far back. Oh, boom. I fixed it. We've got the chat on the screen. It looks horrific, but we've got the chat on the screen. Okay, I'm going to turn it back off for now, but next time I stream, I'll fix that. My bad. I should have checked that before we started, to be honest, and done that. That would have been a much more sensible thing to have done. Now I sleep on the couch. Oh, I'm so sorry. The wife is not happy of this poor man. Questions, Jay. Questions. Focus on answering more questions. No question. Just want to say thanks. Thank you very much for saying that. Fortitude. I couldn't see it because the colour was really dark on my screen on a dark background. That's why I kind of squinted. Where are we? Okay. How do you feel about USO? It's like a no-brainer to invest in it long-term run. Don't know what it is. Is this the one I looked at earlier? Oil again. Who knows? Maybe it is a good idea. Maybe it's not. Electric cars certainly aren't using as much oil. There's not very many people flying at the moment. I don't know. I'm not a fan of oil. I'm an environmentalist. I hope that we stop using oil entirely if we can. I realise we can't at the moment. I'm not some sort of crazy tree hugger. I realise that we need oil, at least for the time being. But for me, I don't want to support the industry. Like plastic especially. Why are we making plastic still? Like, yes, there are a few scenarios that we need it, medical things and whatnot, but really shouldn't be using plastic these days. Good episode on plastic on Netflix on the Dirty Money series, the new series of Dirty Money, worth watching. In fact, all of Dirty Money is worth watching. Amazing series. So yeah, I guess I've answered your question, probably very unsatisfactorily. That's not a word, I invented that. How satisfied are you with your market strategy? That's an interesting question, actually. How satisfied am I with my market strategy? Honestly, not as satisfied as I thought I would be. Like, I've made profit from the market going down, and I realised that the last week has unfortunately hit quite a few of my copiers and me, obviously, and taken away some of that profit. But it hasn't performed as well as I thought it would. You know, I was preparing for this in early February is when I started to shift my portfolio. And I ummed and ahed a bit, and I wasn't as, you know, I didn't kind of stick to my feelings quite as much as I should have. I took precautions and decided to stay a bit more balanced. If I had just really gone for the short, we would be in a much better position now. We could have made a lot more money. But I can't really complain, you know. I'm outperforming, you know, pretty much any major hedge fund or index or bank or stock or cryptocurrency at the moment. You know, the only other people that are beating me are other traders, really. And even on eToro, out of the popular investors, at least on eToro, I don't think there's going to be very many that are beating me. Just turn off all these filters. Actually, maybe I should add a filter. Let's say add a filter of copiers of like over like 10 or something. Well, let's do a bit more than that. There'll be loads. Over 50. So out of everyone with over 50 copiers, I go to returns. I'm pretty sure that I'll still be in like the top 10 or so. Yeah, just here. And you can see how close it is actually between a lot of these guys. And fair play to all of these people for doing better than me. That's over 12 months though. Let's do current quarter. Okay, so it's roughly the same actually. I've dropped down a little bit. But yeah, you get the point. Like, there's not very many people that have performed better than me. Certainly not very many stocks or, you know, normal ETFs or investments that you could have gone with. So, although I am not super pleased with how I performed, you know, I can't really be upset about it. I don't think I have a right to be upset about how I've performed. I've made money at a time when the vast majority of people are losing money. It's just a shame about this drawdown at the end, you know. That's really unfortunate. My original call as well, my original call for the bottom of this market was 6.5k. I made a post about it saying that I think it could be further. I held on to most of my shorts, only closed a couple, and it cost me. But, you know, we still made profit overall. Anyone who copied me for more than a month is well into the green. Actually, I do have a quick question. How do you stop yourself worrying when you are having a bad roll? The best thing to do really is to stop trading, go outside, go for a walk, do something else, play a game, anything like that. It can be difficult if you're holding on to positions though. You know, like I can't lie. I have been a little bit anxious holding some of the shorts during this rally back up. And generally speaking, if you're really anxious and worried about your trades, it means you've got too much exposure. And so, you know, I took action on that a few days ago and cut my exposure quite a bit. And today, when the markets opened, I cut some more exposure. I cut all my profitable trades. All my profitable shorts were closed pretty much. Because, you know, it was clear that the market isn't ready to fall back down yet. It could be another couple of weeks before it does. So for now, we have to trade responsibly. We have to try and, you know, keep things more balanced, and wait for the market to come to us rather than try and, you know, push it, if that makes sense. We don't want to push the market. Weird answer, I know. How many years or months have you been planning to do this nice job? If you feel like you cannot produce good alpha, will you inform copiers? I've wanted to do. I don't know that I've wanted to do trading. I've always really enjoyed trading though for a really long time. You know, this career kind of accidentally happened to me because eToro approached me because I was trading well and they said that I should become a better investor. So I did, and then, you know, I kind of blew up during the crypto years, and everyone noticed me, which is very nice. But I absolutely love it. I couldn't really think of doing a different job. You know, there have been other jobs that I've really enjoyed different aspects of that I've had before, working in esports and stuff. Some of the entrepreneurial stuff that I did was really enjoyable, and I still wish I could do that in some ways. But this is by far the most satisfaction I've had from any job, and I hope that I can continue it for a long time to come. I don't think I could quit trading anyway, so, you know, I might as well try and make money out of it and make it my job. In terms of making a return, I'm still really confident in my abilities. I do think that as I get older, it's going to become more difficult because, you know, your brain becomes just a little bit less flexible to the idea of change and disruption. And those are the two big themes of how I invest. You know, I look for disruptive companies and companies that are really bringing out revolutionary products. So, you know, it may affect my trading style eventually when my brain starts to slow down a little bit. So hopefully I've built up a nice pension pot by then. But I plan on continuing for as long as I can. And if I feel like my performance is starting to slip or that I'm just missing things or not understanding things, It will probably take a while for me to realize it. If I'm completely honest, it'll probably be like 6 months before I actually recognize I'm not as good at this as I used to be. But when that moment does come, I will, of course, tell my copiers and make a plan for, retiring effectively and kind of closing off the account in a sensible way and managing that. But I have no plans on doing that anytime soon. I don't feel like I've lost my touch at all. If anything, I feel like I've continued to learn and improve as a trader. 2018 especially, and the crypto stuff has taught me an awful lot more than I used to know. And really actually reinforced my traditional styles of trading, which is to focus on fundamentals. Chat's way before the video somehow. Do you think the earnings report season will have an impact on the Nasdaq? To the downside, I mean. Yes, absolutely. There are a few. There are actually a few banks and a few analysts actually that have removed all of their targets on stocks. They removed all of them because they've basically admitted that they don't know what's going to happen and that they don't think it's a responsible thing to do to leave targets out there that they don't think are accurate anymore. So I have a lot of respect for the people that decided to do that. Yeah, I think earnings season is going to be chaos, complete chaos, and it will really separate the companies that have managed this well from those who have been unfortunately kind of caught up in the storm. I think it's going to be really interesting looking at the books of companies as well. So in trading, the books basically means the balance sheets, and looking at how much money they actually have in the bank, how much money they have in assets and stuff, and looking at the value of the company as a whole, because there are going to be a lot of companies that are really underwater with debt. And unfortunately, there's going to be some companies that need to take on new debt at a time when debt is going to be very expensive. There's not very many people lending money right now, as you can probably understand, especially to risky companies. So that's why I mentioned earlier, Tesla made a great decision by taking out some additional debt before all of this happened. In hindsight, brilliant move, because it means that they are now safe when, if they hadn't have done that, their share price would surely be down at 300 right now, because everyone would be concerned about them being able to raise the capital they need to continue to grow the company. But we'll probably see a bit more of a switch from growth investing and growth stocks back to value investing. That's typically what happens during these kind of downturns. Do you think the markets will fall deep again as soon as a couple of companies go bankrupt? Which sector would you consider being hit first? It's difficult to say because bailouts happen, and also there have already been substantial stimulus packages. What's interesting with the stimulus is the different types of stimulus packages there have been. So in the UK, generally speaking, we're offering businesses loans. Now, if you're a business, a retailer, for example, and you take out that loan, you've got to pay it back at some point. And you're taking out a loan to just keep your business running. You're not making profit during that time. So really all you're doing is kind of compounding your debts if you're already in financial trouble. So I think retail is one of the sectors actually I think will be hit hardest, clothing stores, because I think airlines and travel companies will get bailed out pretty quickly. If they need it. They're certainly trying for it. Like every day they're begging for bailouts. It's crazy, especially Boeing. Yeah, so I think actually it's the sectors that get overlooked by the government that are at most risk, because I think especially companies like Boeing, again, to use them as an example, they are essentially a company that is of strategic importance to the US. They have a lot of military contracts and things, whereas Primark or River Island or Next, or I'm just naming UK stores here, Target or whatever, I don't know what Target sells. It's not Target. Target's actually in a really good position. I'm actually long on Target right now. So that was a terrible example. But some of the like clothing stores could be hit really badly. So that's kind of what I'm expecting, and restaurant chains as well. Just because they haven't been able to make profit, many of them will have to take out loans. We'll see. Companies that will do well, as I've already mentioned, are the service companies, entertainment companies, things you can do at home that have really not been affected too much by this. Even Twitter, despite their downgrade today that they got, because nobody's going to be advertising with them for a while, they've still attracted new users, and that's worth a lot of money when they can eventually monetize them later on. I might have to go and get a drink because I've run out. My throat's getting very dry. There was a little bit left. Are you interested in Airbus? Do you think there's buy opportunity at the moment? Reasonably interested in it. It's not really a sector I typically trade. I did already trade them a little bit. I don't think now is a terrible time to be buying Airbus. I think now is a reasonably good time. The French will look after Airbus, I think. If Airbus gets in trouble, they will probably get a bailout, the same as Boeing. Enjoyed a silent screen of me waving the mouse around on charts. Maybe you answered the question already. When do you think we'll be break even? Says Pavles 11. Yeah, so you copied on the 19th. Yeah, so basically maximum drawdown. You're down by 10% at the moment. Understand it's temporary. When do you think we'll be at break even? Also, do you think there is a recession coming? Ignore the question on eToro post if you answer here. I'll have to find which question it is. I think a recession is very likely in most countries, including most of Europe and the US. China will avoid it because China has just got so much growth. They might possibly get hit if there is a big move of like anti-globalization, but I'm not sure that will happen. To be honest, I know a lot of people are theorizing that it will, but I don't think it will, if I'm completely honest. There's too much money to be lost by doing that, and companies like to make money. So yeah, recession is inevitable for most G20 nations. I did say that earlier on in the stream. In terms of when to expect your money back, 10% drawdown. Realistically, if you look at my bio and my website, FAQ, things like that, you'll see that my monthly profit target is around 4 to 5%, which means it would take at least 2 months to get you back to break even under normal trading conditions. We are not in normal trading conditions, which means it could take longer because maybe I get things entirely wrong on when the market is going to recover, or it could be faster because maybe I get things very right in the same way that I did when it went down. So, you know, read into that what you will, but I would be prepared to wait potentially 2 months or 3 months. Realistically, that's my estimate. My estimate would be 2 to 3 months to get you back to break even. But hopefully, you never know. Hopefully, I can spin things around and we can have another killer month like we did in January or like we did in March until very recently, and get that money Are you looking to buy online booking companies like Expedia and expect them to bounce later? Not at the moment. And as I said before, those aren't really the sectors that I'm experienced in, so I would be very wary about investing in things like that for long term. If I'm going to invest in something like that, it's only going to be more of a swing trade, maybe holding it for a week or so, because I just don't know enough about the underlying fundamentals and balance sheet to know for sure that they're going to do well. Man, let's see. I stopped when I got to your question. That's hilarious. I'm so sorry. How else did I answer that one? I'm starting to copy you since today. I put $500. Is that enough? Thank you. Yes, that is enough. That is my recommended amount. Thank you for copying. If you are watching this, I will probably just reply to you as well. There we go. We're getting through it. We're almost at the 3-hour mark. I said I'd stop at 3 hours, but there's really not that many more questions left. There are a couple right on the end that just got posted. But I think these ones that are 2 hours old or so, I need to answer really. What are your thoughts on Ripple cryptocurrency? Oh no, it's the dreaded subject. Anyone who's been copying me or following me for a long time knows my views on Ripple very well by now. And they have shifted quite a bit. I used to despise Ripple. I used to think it was horrific. I don't think it's horrific anymore. I still think it's likely to fail, but not as likely as it once was. If anything, this crash has increased their odds of success, as I think there's more chance of them working with major banks and governments and things as they kind of transition into this digital currency world. Does that mean I'm bullish? No, it does not. I would say that I'm still, broadly speaking, quite bearish on Ripple, or XRP, I should say specifically, because Ripple is a company and XRP is the token. And the token is not shares in the company. Can you explain your strategy for this week and why under your choices? Thanks. Not sure I really understand the last bit, but essentially, I took the decision this morning when markets were opening to start cutting some of my shorts because I think we could be at this level a while before we bounce back down. I think the news coming out of Italy and Spain, as I mentioned earlier in this live stream, are looking pretty good actually. USA is obviously still quite far behind, and on the kind of scale that their country is at, and without public healthcare, the same as Europe, they are going to struggle a little bit more to keep things controlled. But I do really like their stimulus package. I think they're sending checks to individual citizens is a very, very smart idea. I'm a big fan of universal income, and I think that that is a very, very good way of keeping things afloat, ready for when you can kind of press play on the economy again, if that makes sense. So I've cut some of my shorts for that reason. I've been gradually increasing exposure to my longs. I'm still focused on some of the slightly safer stocks for the most part. I do have a few growth stocks in here, like I added a position in Wix earlier today, somewhere down here. I did add a position in Wix earlier today. That's a much more risky stock to go for, especially since they rely a lot on small businesses, which could be hit quite hard. But I think they have a really strong company anyway, and that was one of the companies that I was trading before this all erupted. Other companies I'm looking at into investing in, same sectors as usual. The driving electric cars and self-driving technology industry, hardware for consoles, PCs, and servers, which means AMD, Intel, Nvidia, Qualcomm, Micron, Western Digital, all of those guys. Those are the sectors that I'm looking at really, and of course renewable energy as well, which is my other favorite sector. Thanks for your nice job and nice trading, and thanks for answering today. Have a good time in the next weeks and months, and stay healthy. Thank you very much. I'll try my best to do that. Let's have a look. GXX asked a question somewhere, but I can't find it. Do you need fast internet, high-speed machine for trading? What do you use? No, you don't really. As long as your computer isn't a snail. No, not really. The internet connection is the most important thing, and the main thing is that it needs to be stable, because it's not really sending very much data when you're sending your signal to eToro to send to an exchange to buy the shares, right? It's sending like a tiny, tiny little amount of data saying buy or sell. You know, it's not like live streaming Netflix. So yeah, you don't need too much in terms of PC hardware at all. You can do it on a laptop easily, or a netbook. You could do it on your phone if you wanted to. I do regularly when I'm not at home. Obviously, there is a disadvantage compared to people that are literally on the trading floor, or people that are in dedicated offices next door to the exchange with our high-speed fiber cables straight into the exchange. But that's why I don't do day trading. That kind of thing is mainly going to affect people that are trading on really short time frames, and I trade on long time frames. So my average holding time is around a month. In many cases, I'm looking at companies' outlook for the next 1 to 3 years, sometimes even longer. So buying at $14.03 compared to $14.06 really doesn't make much difference when you're looking at those kind of timelines. Jay, please end the video now. It's going to be a long video. It's been 3 hours and 1 minute. I've got a few more questions that I want to try and get through, but people keep submitting them. So maybe I will, because this is getting very long. I think I want to get through these last ones that were at least 2 hours ago. So down to here, because they asked them a long time ago and they deserve a response. And what I will painstakingly do after this, for the love of God, please stop. What I'll do after this is I will painstakingly go through the video on YouTube and add timestamps for questions, so that people can find their questions, because I really didn't expect to be streaming for this long. Hi jaynemesis, thank you for making streaming. It's great and interactive. Can you please talk a little about the allocation of your portfolio at eToro and what will be your strategy when the market turns to clear bullish? I think I've already answered that, so I'm just gonna give it a little thumbs up. Sorry. I literally just talked about my allocation, and I've talked about what I'm going to do when it's turning bullish as well at numerous points throughout. So I hope you're satisfied with that, and I hope you can find it in the video if you're not watching live. Slightly off your requested topic, have you been watching the Steam/Hive thing unfold? I have to admit to my opinion of Tron falling significantly based on what Justin has been up to. I haven't actually. I saw that they bought Steam, I think, and then I guess Hive is a competitor, I imagine. I said that Tron is complete junk for ages. I met Justin's son in Holland a year ago, almost to the day, actually, thinking about it. He's a nice guy. He doesn't strike me as someone that's super, super intelligent and has some grand plan, though. His heart is in the right place. I genuinely believe that, and I know a lot of people don't think that, but I genuinely think that his heart is in the right place and that he's trying to build cool things, but it's not working. Simple as that. But honestly, I still think there's very few dApps that really have found a use case. If anything, it's getting worse, and we've seen a lot of them dying off. Even some of my beloved projects like Augur has been struggling recently, and I really hope that they can kind of keep going and keep pushing out their products. But yeah, generally speaking, I am more and more maximalist by the day. And, you know, I actually showed a chart earlier over here of the Bitcoin dominance up here. So, yeah, I think now is not a good time to be in altcoins for the most part. I do think there's still space for some good privacy coins like Monero. I think Dash is okay. I think there are a few other ones that are doing a pretty decent job as well. But generally speaking, most of your portfolio should be in Bitcoin right now, I think. Unless you're like really actively day trading and stuff. What's your opinion on Beyond Meat, short term and long term, especially the impending lawsuit? I've not been following the lawsuit stuff too much since it was first announced, so I feel unqualified giving you a proper opinion on that. But in terms of the broader view on Beyond Meat in both the short term and the long term, I think short term they're going to be hit by this. Their logistics, supply chain, and everything like that. You know, the number of factories even that they have around the world was just not scaled up ready for something like coronavirus. Certainly where I live, they have not been getting their products to the shelves, because if they had, I would have been buying them. But they haven't. You know, they've been sold out for a very long time. I don't think that's because people are buying them. I think it's because they're not even managing to get it to the shops. So that is a problem, and I think that will impact their next earnings, as will, of course, the lawsuit probably. Long term, still very, very bullish on them. Still think that they're miles ahead of the competition. If you don't know, I am a vegan, so I eat their products quite a lot, and I think that they make the best meat replacement products on the market. I have recently discovered that I am essentially allergic to soy milk, which is really not convenient when you're a vegan. It means I can't have tofu, and I can't have things with a lot of soy in it. But they don't use soy, so happy days for me. Screen. No, screen. Thanks, Lasflow. Yeah. So Beyond Meat, that's what I think about them. They will still do really well long term. They've got some great products in the pipeline. I love the taste of their food. It is very expensive at the moment, but they're scaling up. They have a lot of room to bring down pricing on packaging, increase the deals they're doing with fast food chains and things like that. I think some of the fast food chain stuff they've done has been incredibly successful. Yeah. Tesco Chinham has the burgers. What? Get me some. They didn't have them last time we went there, although to be fair, that was like 2.5 weeks ago now, because we've been self-isolating. So, and of course, you know, getting online delivery is next to impossible at the moment. So, I will let Leanne know though, and then she will venture out of the house, I'm sure, if it means getting herself a Beyond Meat burger. I'm here. Let's go to Tesco. Maybe after the stream ends, Leanne. Let's have a look. 3 hours ago. Just one more. Why have you glued in your portfolio? Yeah, we've already covered that earlier on. I think I answered that in the chat. So, thumbs up on that one. ROGZU. I don't know what that is. It's on the Zurich exchange. Is it a healthcare company? Swiss Healthcare. Yeah. Nope, don't know anything about them. Can't really give you a good opinion on it, I'm afraid. Not my area of expertise. Not the kind of place I'm going to be investing in. Unfortunately. Unfortunately for you, at least. What did you think about Chrono's earnings? I don't know who that is, so I don't think anything about it. Sounds like one of the weed companies. Yeah, it is. Yeah, I don't know anything about them. Pharmaceutical. Are they not cannabis? Yeah, they are cannabis. Yeah. Don't know anything about them. Can't really give you any advice. Sorry. Do you think you can use eToro to day trade successfully? Yes, I do it sometimes. When I'm in the right mood for it, I do day trades, and I do it successfully. It depends on your time frame. I think if you're trading 5-minute charts, it's probably not quite so worthwhile. If you're trading like 15-minute charts or 30-minute charts, absolutely you can make it work. Okay, I think this is going to be the last question, and then I'll just check chat and see what you guys say. Have you got any advice? I'm new to this trading and just need advice on natural gas and crude oil and Chevron. Is good investment, and what advice you got me on them? Do go buy and sell, and what to go buy and sell on Bitcoin, please. Holler me back, please. Okay, I'm going to holler you back, Chris. I don't trade oil. I don't trade oil companies. I don't trade natural gas. I can't help you on any of them. No experience. Entirely unqualified. Yeah, I can't help you with that. Bitcoin, I said earlier on in the stream, I'm actually pretty neutral on it at the moment. That's why I have very little exposure. I think actually I don't even have a single position open on Bitcoin right now. Yeah, no positions on Bitcoin. I closed it earlier. Yeah, and I plan on keeping it that way, at least until I'm a bit more sure of the direction. I think it could be turning bullish soon, but I'm not sure. I think that was the last question. And everyone else, I'm really sorry I couldn't get to your questions. Fine, because I read it now, I'll answer your question because you're watching on the stream. How far do you keep your positions in loss? How far do you set your stop loss? You can see your Beyond Meat is minus 44%. Are you expecting a kickback? Beyond Meat, I don't think is going to kick back soon. I'm still holding it because I'm stubborn and I like the company long term. And it's one of the companies I decided to hold throughout this whole thing, and so that's what I'm going to do. My stop loss was originally at the default 50%. I moved it further down because I was scared that it could hit it, and I don't want it to hit it. I'm happy to just hold this all the way through. It's only 1% of my portfolio. I'm not too fussed even if I lose 100%. You know, I'm not on leverage or anything. I'm happy to just hold on to it. What was the second bit? I've lost it. I've lost your question. Nasdaq 100 this short, are you going to keep it until it came down? Possibly. I'm monitoring the situation. I closed a bunch this morning. I'm hesitant to close the rest because it's acting as a nice hedge and keeping the portfolio steady, which I would like at the moment because I'm not sure which way the market is going to go. I expect it's going to go sideways and then it's going to go down. And so as a result, it doesn't cost me very much to hold these. I might as well keep holding them. If the market goes up, breaks out above the current price, so it breaks out, over something like I would say 8.2k, or towards even honestly, even if it breaks above 1,000, 8,000 even, I would probably close them there, and then reopen them at 8.2k or something. But it all depends on the fundamentals and sentiment supporting that, the numbers for coronavirus and economic numbers and things like that. So it's a bit too difficult to say. I did talk about XRP, yes. Yeah, Leanne doesn't like Beyond Meat sausages, but I love them. That's my favourite. Good brand at the moment, bit hyped. Oh, the memes have started. Okay, I think that does it for today, guys. I don't see anything else. Chris has asked me what I'm having for dinner tonight. I don't think that counts as a good question. I think that does it for the stream today. Wow, what a marathon. I'm really thirsty and I'm going to get a drink as soon as this is done. Thanks for watching. it's going to be a while before this is up on YouTube because, in fact, actually thinking about it, I didn't press the record button, so I'm going to have to try and pull it off of Twitch, which is going to be difficult. So maybe it won't be on YouTube. I'm not sure. I'll cross that bridge when I come to it. But I want to try and organize the content in the video at least a little bit and put timestamps for people to find relevant questions. Hopefully the majority of you saw your questions get answered, even though there were so many and I took far longer than I should have answering them all. I try my best, and hopefully I'll do another one at some point. Maybe I'll make these monthly or something, since there appears to be demand again, since I have copiers again. Obviously, the old school guys, they're used to it now. They don't have any questions left for me. So yeah, thanks for watching, everyone, and I will see you guys in the next one. Good night.